Good evening, everyone. Yes, we are 1 minute late. Apologize for that. Please take a moment to read the disclaimer. We are not registered investment professionals. Please take everything we say with a grain of salt. And we do not know your situation and certainly do not follow us into anything. This is for educational and research purposes only. That being said, please pause the video and read the disclaimer. Big day today. Really big day. Markets rebounded. S&P up 1.5%. NASDAQ up 2.7%. Odds of a December Fed cut increasing. Got a lot of stuff to talk about. Originally, we were going to talk about Meta. We're still going to talk about Meta. There is some news out with Alphabet and Amazon that are worth touching on. So, Kris, we can start with Meta or go into the news with Alphabet and Amazon. What do you want to do?
Okay, let me just start off by saying every NVIDIA fanboy can go suck it. Okay? These guys, for some reason, it's like, no, NVIDIA's got the only tech that matters. Everyone else is wrong. No one else needs to do anything else. Everyone just needs to buy GPUs to the end of time from NVIDIA forever. Jensen Huang is the greatest guy ever. Look, great company, great product. But to think that any of the hyperscalers were just going to pay the NVIDIA tax for the rest of their lives, no, they are not going to give up a 50% margin on hardware. Like, yes, are they going to buy as many NVIDIA chips in the short to medium term as possible? Absolutely. But every single one of the hyperscalers is looking to diversify away from a single point of control. That's just a natural part of the business cycle, right? Now, does NVIDIA have like a really big head start versus everyone else? Probably. But at the end of the day, you still have Google right at the heels of these guys. So you've got the TPU architecture, but this is where, from an investing standpoint, you have to ask yourself, like, okay, from long-term basis, right? Like, what is the business model of Google, and can they survive the current wave of AI? And then at the end of this wave, because eventually growth CapEx is going to, normalize, what's going to happen? Well, Google has a business that's agnostic to demand for hardware versus NVIDIA, who's literally relying on the hyperscalers, literally 5, maybe 6 big companies to buy all of their stuff. So, I think NVIDIA knows it too. That's why they're investing in all these circular financing deals, because they need to get out of the cyclical part of the semiconductor business. You always have these moments where you get these overinvestment cycles, and then they just kind of like die down, and then they get overinvested again. It happens with RAM, with DRAM. It's going to happen with GPUs. At some point, people are going to say, you know what? I need NVIDIA GPUs. I'm not saying I don't, but I just don't need as many of them going forward, because I need demand to catch up to all the supply that I already have existing. So whenever it comes to that, you've got the opportunity for Google and all of these other guys to catch up. And by the way, Google works with Broadcom to design the chips and MediaTek to design the chips. Like, Google's TPUs have their own architecture that, like, there are some companies that are really important that I think we should kind of highlight, because if this deal with Meta is actually confirmed, is it confirmed?
It came out around 5:30.
Yeah, because then what's going to happen is you're not only going to see the benefit from Google, which right now Google is definitely getting the spotlight, but you're also going to see these other businesses catch some what is it called? Catch some interest as well. Let me just bring up the ones that I see. 1 second. Yeah, right here. So, and but by the way, sorry about the whole NVIDIA hate comment. I didn't mean to like hate on y'all, but just, dude, anytime I've said in the past, like, oh no, NVIDIA really needs, is not the only name in town, everyone gets all pissed off. Like, no, what are you talking about? You don't know what you're talking about. Like, yes, I get it. NVIDIA has 90% market share on accelerated compute. 90% is a lot, but there's nowhere to go but down. There's no like, hey, let's go to 120%, So it's the same thing with ChatGPT. ChatGPT, everyone was like, oh, ChatGPT, Gemini, Google, they're never going to come back. And now Google's starting to come back, and people are realizing it's not a one winner take all situation just yet. So yeah. All right. So these are the companies that basically are going to benefit from growth in Google TPUs if it comes to that. So TSMC, of course, they're not going anywhere. TSMC, Amkor, Model Assembly, Celestica. I don't know if you, and one of the things that we should do is actually like put the stock prices of each of these things on the side so people can kind of see how these things have performed, you know? Do you want to go ahead and do that, Steven, or do you want me to bring it up?
I have no idea how to do that.
All right, I'll do it. Hold on 1 second. So first, just Broadcom itself. Broadcom has been tearing it up, all right? So it's not just, hey, NVIDIA, but Broadcom, who does the designs for the TPU and stuff, they're doing amazing, right? You've got MediaTek. They're Taiwanese, so they're listed in Taiwan. So in the Taipei stock, Celestica, CLS. Look at that. 79 to now 322. It's a $36 billion company. Jabil, I don't even know if they're listed here. Panasonic, Amphenol. Amphenol makes the connection. Amphenol. Look at that. So people really have to get off of this. NVIDIA is the only way to play the AI trade. There's other companies that are going to benefit from this giant wave of CapEx along with it that are not necessarily dependent on just one company. So right now, in my opinion, I think that it's a good idea to kind of look around a little bit too, you know. See, you NVIDIA guys know nothing. No, don't say that. They know plenty. It's just, I think my biggest contention with the Uber NVIDIA bulls is that it almost seems like because they're at the top, they're blinded by anything around them. Have you ever got into that position before where you're like interested in one company? So you're like, you have this bias towards everyone else. Like, no, everyone else is not good because you're so heavily invested in their thesis.
So I think that we need to separate AI training versus AI inference because it's two very different things. So NVIDIA's chips are still the dominant force in training. But for inference, the TPUs are custom silicon to do a very specific task with ASIC, and they are becoming superior for very specific functions. Now, Alphabet and Amazon have both moved to TPUs for very specific workloads. Alphabet is actually training also on its TPU. But when it comes down to it, NVIDIA is still the biggest, the most powerful for training. As new models come out, they're going to need to be trained, and the raw horsepower can't be matched by a TPU. But once it's trained, these companies can move into TPUs to actually run it for all the queries that people like Kris and I and everybody in the chat are doing. So there's two different things that need to be separated out. And Kris is right on the fact that TPUs are going to get more prevalent. We already saw Anthropic move toward TPUs for a lot of things with their models. Once it gets up and running with Amazon, Amazon has a full data center full of TPUs. So this is going to become more popular. The question is it going to disrupt NVIDIA? I don't think it's going to disrupt them in the next couple of years. I do think that there is going to be a problem with NVIDIA 3 to 5 years from now because the raw horsepower may not be needed after that. Now, I can't tell the future. It may. We got to see what happens. But there's no doubt that more companies are going to look to Alphabet to see what they can utilize their TPUs for and what can be a custom solution versus just a raw horsepower solution.
Yeah. And I mean, it's and this is not to say that Nvidia is not going to do well long term, because I think Nvidia still has great products. It's going to do well, and the total addressable market is expanding significantly. So it's not like, it's not like Nvidia is not going to do well. So I just think that it's that bias that the leader can only lead for the rest of time that people get a little bit caught up with. And what's funny is now people are looking at Google as like the next big darling, like, oh my God, Google can do no wrong, when literally 6 months ago, the sentiment was completely on the opposite end of things. Google was trading at a forward PE of like 16 at the time. And I was like, how does this make any sense that this company who's literally started the transformer tech is all of a sudden going to be behind? Like, no, they're going to catch up. They're going to do their thing. So they are better. In my opinion, they're at a better place now than ever before. But if you're an investor, you're not trying to buy what everyone is already seeing. Like, there's not a lot of alpha in that, right? Like the place to be in Google was when it was trading at 150, 160. That's how you make superior returns, where you buy things that others can't see. So right now, and I'm going to tie this back to Meta right now. I think Google is going to do really well going forward, but I think that the better position to be in, to be honest with you, right now is actually Meta. Meta is being very underappreciated, very similar to what Google was going through 6 months ago. If you look at just the cash flows that Meta has going forward, they're phenomenal. They're going to be doing they're going to do the same amount of cash flow that Google is doing today. They're going to be doing that probably in about a year or two, but you're getting it at 1.5 trillion market cap versus Google, which is almost like, what is it, 4 trillion now, roughly?
About that, this is the first time in 7 years that they've had a larger market cap than Microsoft.
Yeah. So this is where it's not just, like I said, it's not saying, oh, go ahead, sell all your Google and go buy Meta instead. No, it's just, you know what? If you want another high quality business that is in the AI catch-up trade, Meta is the place to be. And there's a variety of reasons why Meta is going to do really well. And I think in the short to medium term, people have really gotten a little bit concerned with Meta because of all their capex. But I outlined this last night with this article that I wrote for my Patreon people, which was, unlike the other companies that are adopting AI and they don't necessarily have a profitable tangible return already, Meta's value accretion is immediate. Like, there is legit demand from Meta right now that their actual operations are benefiting significantly. So, in terms of like investing in AI, some companies are investing in AI hoping for a return in the future. Meta is already utilizing AI internally and generating a lot of positive traction. And the walled garden that they have right now is literally giant moats are going up right now in Google, in Meta's business model. So, I think if the market, it'll take a few months. I'm not saying it's going to be an immediate reaction. People are just going to recognize it right away, but we could see Meta back at all-time highs within a probably 90 to 100-day window, if everything lines up correctly for them. Earnings that are in January, I think people are going to be very positively surprised at some of the information that comes out then, and we'll see. But right now, if you were asking me, Chris, among the mega caps, which one is your favorite and which one is your least favorite? My favorite is 100% Meta. 100% Meta. I am nowhere near as bullish on anyone else that I am on Meta.
Yeah, so there are some things from the earnings report from Meta that are very important. So when Kris is talking about an AI-facing business, okay, Reels has grown into an annual run rate business that exceeds 50 billion. And that's with time spent over Facebook and Instagram. And it grew double digits year over year in Q3, driven by video. Advertising revenue from advertisers using end-to-end automated solutions such as Advantage Plus has reached 60 billion. This is all AI driven. And Meta has grown its business messaging 60% year over year. And they're using open business AIs to message across platforms and scale conversations and improve sales. Next is going to be full-blown chatbots for all the small businesses and large businesses that utilize Instagram. They're going to probably charge a fee for that or have some type of suite where they're able to do AI advertising combined with a chatbot. There's a lot of immediate accretive to EPS that we're going to see over the next couple of years. Kris is 100% right. Meta is a bona fide winner because the consumer is going to use the AI immediately and it's going to be monetizable.
Yeah. I mean, you can see just how rapidly they have scaled up since the launch of ChatGPT. Look at this. This right here is Meta's what is that thing called? Revenues.
Oh, I like
since
my chart
ChatGPT.
better.
Yeah, but
Well,
like I
can
said,
you overlay? Because I actually built out the same thing.
yeah,
Can you overlay gross profit, EBITDA, net income, and
yeah,
operating income?
yeah. I'll put it up there. Give me a second. I'm telling you, Zuck may be a lot of things, but the guy is not into
Well,
just investing in
Kris is
things without.
building that.
Yeah.
I think it's going to be nicer than mine. So
Okay.
mine's
So
just harder to read than that.
revenue, gross profit,
EBITDA and net income.
okay. So EBITDA and net
Is do a
income.
Google Sheets, it gets a little hard to read with the different colors, but that's why I want Kris to do it on Fiscal AI. But he's right. I mean, this is a cash cow, and anybody that is angry at Zuck spending on Reality Labs is crazy. He's earned that right. He has
Yeah.
absolutely earned that right.
So if you see this, I'm just gonna toggle this separately. So diluted EPS, I'm gonna just put it as a bar chart, and I will. Okay, so there you go. So let me do last 12 months trailing. So you see this right here. This is Google. I mean, sorry. This is Meta's EPS, how it was declining during that phase where they had overhired and they started to get cost rationalized. This is when ChatGPT got released right here, okay, of 22. And since then, revenues have been climbing, EPS has been climbing, and CAGRing almost 30%. The only thing is last quarter, as we explained last call when we did this, they had a one-time non-cash expense. Literally, it's a rounding error for these guys. And if it were not for that, on an adjusted basis, let me see if I have the adjusted basis right here. Adjusted EPS. Let's see, red. If it wasn't for that one thing, so let me do ops cash. Ops cash is usually a good indicator for that cash flow. And you can see operating cash. You can see that there was no change in operating cash, right? Let me hide the diluted EPS so people, actually the other one, so people can see. There you go. Look at that. Their operating cash was $107 billion. So yes, net income was down because of that non-cash charge, but look at the cash flow that they generated. $107 billion in operating cash. So the worry that, oh, they're building out these data centers, it's going to be expensive. Yeah, it may be expensive for a few quarters, but these things, and not to mention, on the other hand, people keep saying that, oh, these GPUs and TPUs, they have like longer lifespans. They can run for seven years now. Well, there you go. That just means that, you know, they don't need to spend as much in the later years because the hardware that they have can last longer than people are expecting. So Look at this. Massive, massive move up for these guys. So right now, this whole move down is the opportunity that that investors should really just take a second look at and buy the dip on if they have the what is it called? If they have the courage to buy it. Do you want to present anything else?
I mean, one of the things I wanted to discuss is that it's crazy that people tend to say, man, I wish I had bought Meta here or I wish I had bought Meta there. Yet it falls from where it was. I mean, it was over 750, I believe, at one point. And why are we not wanting to buy it here if you wish
It was
you had bought it?
780. It was 780.
I mean,
780.
look, here's my continued bull case for Meta. Nobody's getting rid of Instagram. Nobody's getting rid of Facebook. Nobody's getting rid of WhatsApp, which is barely monetized right now. You have more than a third of the global population utilizing it. They continue to increase their cash from operations, as Kris showed. They're continuing to increase their EBITDA. They have a fortress balance sheet, and they have no competition. Now, we can say
TikTok is a competitor, but TikTok is doing, like, if you see some of the metrics that I've seen with regard to Instagram monetization and TikTok, Instagram is catching up, and they're catching up very quickly. So sorry, go ahead, Steven.
Yeah. So, I mean, when I say that they have no competition, I mean, nobody is chipping away at their moat. There's not 12 different things to choose from. It's either Instagram or TikTok at the end of the day. It's Apple and Android. There's no third party. Snapchat's not a competitor. Now, for advertising, obviously, Alphabet is a competitor. Amazon is starting to build the platform. Other than those three, there's really only two, Alphabet and Meta, where if you're going to ask an advertising department, where are we deploying capital? Those are the two best ROIs. And it's going to be like that for a very long time, likely. And we're getting into an area where Meta really may be able to win the next frontier of computing with wearables. And it's still a very interesting story. It's trading at a forward multiple that's cheaper than Coca-Cola. And when you just look at it with the amount of buybacks they're doing, and at some point, Meta is not a cloud service provider like Alphabet, Amazon, or Microsoft. At some point, they're going to be able to scale back the CapEx quicker than the others and convert that to free cash flow. And when they do that, they're likely going to buy even more shares, which will be accretive to EPS. So I think that Meta is a very interesting company here, and I think they're going to continue to be very interesting.
Yeah, let me just show you guys. So if you see this, I'm going to get rid of NVIDIA on here from EV to EBITDA because they're literally like one of the giant move ups. So let me just get rid of NVIDIA. But if you look at the other companies, okay. So right now, let me make this a little bit bigger so people can see. Right now, you can see this giant surge in valuation premium that Google's got, right? So basically, Google was trading around here. It was range bound under the 20s. And then people said, oh, you know what? Google's going to get disrupted. Brad Gertzner and all of these guys came out and said, oh, search is going to get disrupted. Everyone is using ChatGPT. And then all of a sudden, people were just like, no, Google's not a good business. But they just kept performing. And now Google's valuation is up here, right? So it's not to say that Google's not going to be a good investment, especially because their growth rate is superb. They're executing on all cylinders. But when you look at the other ones, like look at Microsoft. Microsoft went from 24 to like 19 now. Now all of a sudden, Microsoft's on the back foot. They were the leaders last June. Alphabet was getting put on the sidelines. Look at Meta, same thing. Meta is right here while they're still performing. And Meta is trading their EV to EBITDA is close to its what is it called? Their Liberation Day lows. So you're getting a deal on Meta, a business that's actually growing, outperforming, yet the market hasn't recognized this yet. I expect this to eventually jump to about 22, 23 once the market kind of fully realizes the potential of these guys. And when that happens, that's a giant re-rating in earnings multiples. So like I said, we did the math last week. We got a price target between 900 and 1,000 in a couple of years, which means that people should be willing to pay at least 700, 800 bucks now, you know? So like I said, highly undervalued relative to where they're going. So yeah.
Yeah, I mean,
I've got a bunch of other DD on Meta too that I'm gonna just put out there slowly, but that's the first thesis on Meta is just a valuation.
Yeah, and look, the valuation is that it is tremendously undervalued. That's basically what it is right now.
Mm-hmm.
So we'll see what happens. I think the market's going to start to wake up to it. And we saw a little bit today while the market did explode. I think Meta will continue, and they're going to continue to be a cash cow. And I think one of the big things is come next earnings season at the end of January, when we see such a huge difference in EPS, I think the market is going to realize that it really was a one-time non-cash impairment that they had to take. And then you get the double whammy. If Zuck says what he's going to do with all the CapEx spend, they'll feel a lot more confident about what he's doing. And I think the narrative is going to change a little bit.
Yeah. Yeah. I'm telling you, I think it's just a matter of people getting the accounting right, you know, and just understanding how the accounting works out in all of this. And like I said, that will help enable a nice catch-up trade. I mean, the only time where you've gotten heavy discounts on a great company like Meta has been around here during the whole, like, you know, post-COVID lows when it was in the double digits for like a little bit. So after that, it's just been doing well, and it's topped out about 2021 EV to EBITDA. So I think this eventually, because of its growth rate, will eventually get to that same EV to EBITDA, probably like 22, 20. It could even go higher if people really like see some dramatic improvements in some of their other core metrics, and they cut back on CapEx and they increase their free cash flow and do more share buybacks, which is likely to happen in the next couple of years. This could be re-rated up to at least 24, 25. Very similar to where some of these other guys are. I mean, like, I'm looking at Apple right now. Apple is almost at a 28%. 28 EV to EBITDA, and their revenue growth is literally non-existent. Their claim to fame right now is, well, number one, I do think that they're going to have a really good couple of quarters, because the iPhone 17 demand has just been off the hook from what I've been reading, you know. So, but look at where Google is now. Google, in terms of EV to EBITDA, it's at a point where it hasn't been for a long time, actually.
Well, I got something I want to. I had 2 or 3 videos I want to watch with you.
Sure.
And it goes into what you were saying. So it looks like people are agreeing with you. The first one's going to be Alphabet's a threat to NVIDIA OpenAI ecosystem. So I have not seen any of these. I've been at the office all day, so we'll get into it. Did you also see that Amazon, 2 big deals today? They invested $15 billion into Northern Indiana data center campus. And then now they're investing up to $50 billion to expand AI infrastructure for U.S. government agencies. So this could be bullish for a lot of things. Let's start with Alphabet. So let me bring this to the screen. What the fuck just opened? Apologize, everybody. I had too many freaking windows open. All right.
Not only perfect for this segment because you cover the world of internet and media, but also you've been all over the story. You've been talking about it. You've been right. What did others get wrong about the Alphabet search story?
So I think one of the things that people get wrong is Google's execution has really been best in class. I mean, they saw the minute OpenAI launched ChatGPT, like one of the original founders of Google, when it was called Google, came back and sat in a room and said, guys, we can't be behind. And so now Gemini 3 is proof to a lot of people that they have now caught up and are leading. Even that's why Anthropic was forced to announce its new model today. I want to make an economic point, sort of building on the question you asked McKinsey, which is Anthropic announced today economically that Microsoft would invest $5 billion in it, and Anthropic would commit to $30 billion of compute capacity at Microsoft Azure's cloud business, and NVIDIA would invest $10 billion today in Claude. So Anthropic, and they would commit, meaning Claude, would commit to buy 50 billion NVIDIA chips over time. So part of what's happening here is a little bit of the Silicon Valley. We're going to create an interlocking ecosystem like a keiretsu in Japan, where everyone's success sort of pulls up and down the entire AI ecosystem together.
I haven't heard that term in about 30 years. They used to call it a zaibatsu as well. I used to work for a Japanese company and this sort of vertical integration. So do you, Laura, worry that a lot of that is sort of this idea of circular money, or is that okay? Because it happens in consumer products all the time, by the way. Somebody's got to pay somebody to take their product.
I think the issue, Brian, the best question is, are people overspending on AI, right? Is it overhyped? The answer is whether you win. You can do Apple, which is just saying we're not going to invest in AI because we think all of AI is a bubble. You can do Meta, which is investing a lot, and if it loses, it was a bad investment. You can do Google or Alphabet, and if it invests, technology is going to be driven by Gen AI for the next 15 years. So if you don't have a play or you don't have a winning play, you aren't a tech company. And all of these companies think they're tech first. So I think you have to spend the money and try to win, because it's a binary outcome. You either win or lose. But if you don't play, you're losing.
I will use Claude, Anthropic's thing. I'll use ChatGPT, OpenAI's thing as well, for some searches, for some information. I don't fully trust it yet, but that's probably my own trust and emotional issues. Who are they taking market share from? If it's not Alphabet, people are searching for stuff there. They're eliminating the search somewhere else, are they not? Or is it maybe they're just doubling the amount of searches they're doing?
So what Alphabet tells us is that Answers, which is their product that sort of replaces search, generates more engagement, longer engagement, and 10% more searches. So people go down these rabbit holes, they ask a question, Answers gives them an answer, and they're like, oh, that's interesting, let me go. And then they do more searches, and they spend 20% more time on Google search, which allows them to serve more ads than if the person had just done a search and then gone out to a link and left the Google ecosystem because it went out to a link. So from a Google point of view, the other point I really need to make about Alphabet is they own everything. They own the chips. Yep. They own best-in-class consumer data. They own the cloud. They're totally vertically integrated, and they are a threat to the NVIDIA OpenAI ecosystem because Google Alphabet does everything itself away from that big ecosystem we were talking about with Anthropic.
Well,
You're muted.
Yeah, the thing with NVIDIA is that they're dependent on other people buying their stuff. OpenAI is dependent on other people financing its unprofitability, right? Not to say that there aren't enough people willing to do that, but because you're not vertically integrated, you're literally like digging at each other's margins. Like NVIDIA has to give up margins if it wants to keep investing in these deals, because if any of these businesses don't end up working out, that's money that NVIDIA's going to lose out on, right? Google doesn't have to worry about that. being a vertically integrated business has a lot of what is it called? Synergistic impacts where you're not giving away margin to your competitors. So like I said, I like Google. I think that even after this AI wave dies down, and if because I think that eventually the AI wave will die down, but not in the sense that people are not going to be long on AI. I think it's very similar to cloud. People will always be long on this tech that's going to be out. The thing is, it's not going to be growth forever. It's at some point the growth is going to end up coming down to that reasonable 20%, 20 to 30% annualized level, which is great from an investing standpoint. But at the same time, if you were to tell me, hey, NVIDIA is only going to grow 20% for the next 20% year over year for the next 10 years, what kind of multiple would you give NVIDIA based on that assumption?
Well, look, I think it's really interesting that they said exactly what you and I said yesterday, that Alphabet owns the entire stack. And when you start looking at OpenAI that's burning cash, that's really a one-trick pony versus Alphabet that has all the data from the two biggest search engines. They're massively profitable. They're not taking on debt. They're not burning cash. And they can take a blank check and fund it with profitability. I got to tell you, I don't know that OpenAI deserves a $500 billion valuation. I don't even know if they deserve a $200
trillion. Some people are
billion.
saying some people say they deserve $1 trillion.
Trillion. I don't think they're worth $250 billion at this point. They're burning cash. Their profitability is nowhere in sight, and they're going to go head to head with Alphabet, who can train all of their models on all the data from their search engines. It's just, I don't know. I think Alphabet is going to be the real winner, and I think that Alphabet is still, even after this run, such a solid company. I mean,
yeah, agree.
Hard to bet against them.
If you have a position in Google, keep it. There's no going wrong with Google, right? If you have a position in NVIDIA, keep it. There's no going wrong with NVIDIA, at least for now. But right now, if you were to tell me, Kris, new money, where would you park it? I would park it at Meta. Easy enough to see where this thing is going, But you have to look like 6 months, maybe a year down the line, and people are going to see like, wait a second, this company is just generating a boatload of cash flow. So, I mean, that's the general thesis. I know one of the things here as US people that we really need to be careful. We have our own biases on certain things. And because we have this bias, we miss opportunities. If you go outside of the US, WhatsApp, there's actually monetization there. Instagram, there's monetization. You're talking about a platform that has 3 to 4 billion people utilizing this family of applications. And they're not utilizing it like, once a month or twice a month. They're utilizing it every single day for hours on hours. Okay. That's their primary way of communicating with people, a lot of people. So just realize that this company is much bigger than, oh, my grandma uses Facebook. I don't even go on Facebook anymore. Okay. But trust me, there's a lot more people that are utilizing it. So
a lot of people overseas also.
Yeah. Yeah. You're talking about hundreds of billions of dollars in total addressable market that keeps getting added every single year. The other thing is these guys have a platform that lets advertisers do all this AI targeting. And as we go on in the future, you're going to see that there's so much value in having that knowledge graph that like I said, that's why Meta is building out these AI compute clusters, because they actually see the value immediately on their core products.
Did you see what Benioff said today about
Google
Alphabet's
Gemini
model?
Yeah, dude, I've been using Gemini too. It's amazing. I love it.
Yeah, it's pretty interesting. Now, I was saying that these companies were going to have to come out over the top and spend money. Amazon announcing 65 billion today in more data centers. I mean, I really do think that natural gas and then companies like Eden are going to do well. But I want to hear about the government one. So let's play this. Oh, let's do
By the way,
that one.
Amazon is also one of those things that's like a nice catch-up trade, but not as much as Meta, to be honest.
I got a theory, so give me a sec. Let's play this and I'll tell you my theory.
On Amazon, Mackenzie Sigalos joins us now in what's been a very busy day of newsmaking for this company. What's this?
Yes, it has been, Scott. Third announcement of the day, Amazon investing another $15 billion into northern Indiana to build an AI data center campus. Now, this will serve multiple customers, and a source tells me it's not directly tied to that new OpenAI contract. But what we do know is that the project adds 2.4 gigawatts of capacity, enough to power 1.8 million homes. And it comes on top of that $11 billion Anthropic campus already underway in the area. Since 2010, Amazon has invested more than $31 billion into the state. And a big piece of this is energy. Indiana is rapidly becoming an AI infrastructure hub thanks to an abundance of nuclear and coal power, plus generous local incentives. Part of why you're seeing companies like GM and Samsung build plants just down the road from Amazon. For this new build out, though, Amazon has struck an agreement with the local utility NIPSCO, where the company will finance new generation and transmission lines without raising rates for residents. And Scott, this is actually Amazon's second data center announcement of the day. The company also unveiled a $50 billion plan to build AI and supercomputing infrastructure for the U.S. government.
So for Amazon, I do think they get to $1 trillion revenue in 2029. I think AWS is going to get even bigger, especially with the $50 billion deal from the government. And I do think they're going to be able to get to 18 to 20% margin over the next 4 years. They're at 11.2%. So if they can get to a 20% margin or an 18% margin, that becomes 180 to 200 billion of operating income. You look at where they are compared to the rest of the Mag 7, it is definitely an interesting catch-up trade where this could be a company that's a $6 or $7 billion company, if not more.
Yeah, I agree, man. There are opportunities in this market outside of just the market leaders right now, and I think the catch-up trade is one that that's worth it to do. My friend who from work, he just texted me. He was like, Google's at 3:30. I've been watching live. Yeah, man. I called him today. I was like, yo, look at Meta. Look at Meta. Meta's the one to watch right now. So, yeah, I mean, I don't know. Today was a nice violent reversal from Friday. Everyone got super bearish all of a sudden. And today it was just on the opposite end. People were just going crazy on the going crazy on like the catch up. Like BM&R was up nice, almost 20% today. Woo!
Yes, it was.
Took a lot of pressure off my shoulders, man. I was gonna loss harvest it, so I'm glad I'm waiting. I'm gonna wait until December, so I'll see what I have. I may not even have losses that I need to write off, so we'll see.
I mean, if crypto comes back, if it's not a crypto winter, it's gonna be really interesting. And did you happen to see the news about JP Morgan and MicroStrategy today?
No.
Supposedly they have a huge short out on MicroStrategy. So,
Really?
Yeah.
Interesting.
I don't know if it's real. It was all over X during the day.
Yeah.
So we'll see. But
Someone said, bring on Tanner to defend NVIDIA. Go ahead, call Tanner. See if he wants to defend NVIDIA.
I mean, do you want me to see if he wants to come on?
Yeah, if he's free.
Okay. He's probably in the sauna, but we'll see. We're going to call him right now.
Okay.
Would you like a link to come discuss NVIDIA with Kris and myself? We are live right now.
Come defend your boy.
Kris wants you to come defend Jensen. Sending you a link. Look at WhatsApp.
Yes. Yes.
All right.
This just got interesting.
Okay.
This just got interesting.
You know what? I'm going to get some milk and cookies, and I'm going to sit here with my milk and
Yo,
cookies.
enough with the milk and cookies, bro. Just drink some water, Steve. Come on,
Dude,
man.
what do you mean milk with the milk and cookies? I like milk and cookies.
Milk and
Am I not
cookies.
allowed to enjoy milk and cookies?
You can enjoy milk and cookies, but
Okay.
whatever.
And I am drinking water. I got my water right here.
Okay.
I'm hitting my quota for water. I appreciate it.
I'm trying to see. I haven't been watching White Boy Weekly for a little bit, so I gotta find
Oh
out.
God, you're gonna start with that again. Oh,
That's
my
what I'm
God.
calling it. That's what I'm gonna call it. It's easier to call it that. So I haven't been watching White Boy Weekly in a little bit, so I'm trying to understand what Tanner's core thesis on NVIDIA is. I'm gonna wait and let him explain
His
it
core
first.
thesis is he bought it in like 2017.
That's his core thesis.
I don't know.
Nah, that's not a core thesis. That's a good thesis. Like back then, if you were able to see this AI wave coming, like, hey, all the power to you. And not to mention, like, when it comes to NVIDIA, you know, they are very, very undervalued. But that's when everything is 2020 in hindsight, right? Like every time people are like, "Oh man, I should have bought Meta at 80." Like, it would have. It was hard to see them. They were declining their margins. It had
not
a whole
hard to
bunch of
see.
things. It was not easy.
It was very easy.
For Meta.
Yes.
I mean, for guys like me and you, it was easy because we actually understood, like, from a business standpoint, where these guys were headed. It's the same thing that we saw with Google, right? I still remember all the shit we got when we were talking about Google. Like, literally, I would post about Google, and every day it was just like, oh, Google's done. ChatGPT is just going to take over everything. And that's when you have to just,
you know how
I
many
don't know.
times I had to defend search is not dying, search is not, like, I got so sick of the narrative, and I kept saying, listen, I don't have to defend it. The numbers defend themselves. Search is actually getting bigger. It's not dying.
Yeah. Yeah. And not to mention, people were also like calling out Sundar Pichai, saying he's not a wartime CEO. He doesn't know what to do.
You were banging
Like,
that drum a lot. So for people that don't know, Kris was banging that drum that he is a wartime CEO, and everybody's about to find out. So
yeah, it's going to take time, man, but eventually it worked out. So, you know, this is one of those opportunities in Meta that, like I said, I'm not saying that they're going to reverse right away, but in terms of just getting back to some normal EV to EBITDA it's going to be value creative to shareholders who have the courage and patience to buy today. And, you know, I don't know if you see, like, the street is all like increasing their price targets on them too. Did you see that?
on who?
On Meta.
Good.
I just saw a couple of price targets today, like 900 plus. Let me see. Give me a second. Oh yeah, look at. Thank you. What's his name? What's his? Look at what Matt posted.
Tanner was my adversary for a while because he was against Google. Now Tanner is my milk daddy. Tanner was against Google. I would like to take credit for making him see the light, but
good. Share the screen. Look at what Matt
Tanner
posted.
can discuss why he's bullish then. But I sat there for a long time trying to convince him about Alphabet.
Yeah.
Listen, Matt's post about this was hilarious. I actually texted it back to him.
Yeah. Google becoming the next NVIDIA or something. Yeah. And like I said, this is not to say that NVIDIA is not going to do well. I hope people don't think like, oh, NVIDIA is going to go bankrupt now that everyone is going to be using TPUs. Like, no, that's not the case at all. It's just a matter of, from a business standpoint, what a lot of people thought was a monopoly is actually going to be a duopoly. and maybe even a triopoly if Amazon does a really good job scaling up its Trinium. I don't know how to say it, but their chips as well. And it doesn't necessarily mean that they need to do it specifically, to utilize it for outside use. Internal use for Amazon could prove to be a very, very positive thing. By the way, did you see the thing with Amazon today? They launched their like a Starlink competitor.
I did not see it today, but I do know that they are working on that. So that's interesting.
Yeah. Let me just see who posted it. My friend, okay, BNB Paribas right here. They put a outperform rating, a 1-year price target to 800. Let me see. Maybe it's on stock now. Okay. These haven't been updated.
The hell's that?
You're getting someone's calling you, I think.
Hello? I did send the link. I sent it to your ex. Oh, you know what? I sent it to Kris, maybe? No, no, maybe I sent it to Kris. Sorry, my bad.
Yeah. Trying to see.
I actually sent it to your ex instead of Tanner's.
Yeah. Yeah, man. Are you looking at anyone else? Oh, by the way, people forget about AMD too. AMD is right there as well, So it's just this whole argument that like Nvidia's got a monopoly. I don't necessarily think that they have a giant monopoly. I do think that their monopoly power is going to be there for a while, but these other guys are going to chomp at them.
Now it's going to get interesting.
Yeah. What's going on, Tanner? Are you selling Nvidia and buying Meta? Is that what's happening?
No.
Why?
No,
Why?
I've sold some shares of Nvidia to buy Nebius a few weeks ago.
Ooh, by the way, you guys heard it here first. Tanner sold Nvidia. That's all I heard.
Well, you didn't hear it here first. You heard it on my channel first, but
I'm gonna put it out to the world now. Tanner sells Nvidia.
Yeah.
All right. So now the question is, Tanner, as a Nvidia bull, as the person who was correct and I was wrong about Nvidia in the beginning, does today change anything for you?
No. Nothing's changed. I'm also a shareholder of companies like Google, so I benefit regardless. I think that the market is going to grow at essentially a 50% compounded annual growth rate. That's what the US market is expecting. That's what Chinese markets are expecting. I do agree with I wasn't listening before. I only started listening after I was waiting for the link. And Kris said that there's going to be multiple winners. I believe in that. But I want to hold those winners.
Tanner, I think you made a great move with buying Nebius, especially because let's say Nvidia stays flat for a little bit. One of the biggest beneficiaries for you as a portfolio manager is making sure that you have that outperformer, like secondary outperformer that helps you build that total return. Because I mean, there will be some catch up, but dude, I see what you're seeing with Nebius. I see them being a neo cloud that actually has software and cloud and everything else that can be an independent winner on its own. And it's not necessarily just tied to these data center build outs like all these other guys are.
Yeah. And but I'm curious which I've got a very full position for Nvidia for my size portfolio. Why would you think that a name like Meta or maybe another Mag 7 name would outperform Nvidia?
Well, there's a couple of things. Number one is when you have this giant narrative shift, right? The multiples either compress or they expand, right? So right now, if you look at Nvidia, NVIDIA's multiples have expanded significantly because the expectation is NVIDIA will constantly keep beating and they're going to do well. And I agree with that, but that's already kind of baked into the sauce already. On the other hand, when you look at Meta is like Left 4 Dead right now, where people are like, oh no, why should I pay a good multiple for Meta when its net income just declined last quarter, right? So, and it's the same thing that happened with Google. People thought Google's business fundamentals were going in the right direction the entire time. So it was not like their business fundamentals had changed, but it's just that multiple compression that Google got from this narrative that, that they were going to lose out in the world of AI and they were just eventually going to, just be like a market perform business. And I think that was the wrong part. So that's what I'm saying right now with NVIDIA. I think NVIDIA is going to do well. If you want a 15, 20% compounded growth rate for the next, I think 10, 15 years, by all means, buy NVIDIA. The power of their cash flows and buybacks is going to report an EPS growth of about 15, 20% compounded for quite some time. On the other hand, when you look at Meta, if you're buying it at a much lower cost basis, you can actually do 30, 40%, maybe even a 50% compounded annual growth rate in their EPS, at least for the next 2 years. So if you think about like what the market is going to
wait a sec. You're comparing the compounded annual growth rate of Meta of 2 to 3 years from now, but NVIDIA we're stretching out to 10 years.
Yeah.
What does NVIDIA's EPS growth look like on a compounded basis over the next 2 to 3 years?
No. So let me explain that real quick. The challenge is eventually people are going to say, yeah, I'm willing to pay a 20% growth rate, right? But the thing is, in order to get to that 20% growth rate, Meta right now should be worth about $800, right? Right now it's worth $600, 600 and what is it, 610, 620 today. In the short to medium term, it should automatically right now get re-rated up to 800, and then it can go at that 20% compounded annual growth rate. And eventually, that's the thing. So if you look at most of these Mag 7s, they're CAGRing about 20, 30% per year.
Yeah.
So that's why I'm saying it's a catch-up trade. And at some point, Meta will get to that 800 amount, and then it'll stay, at a nice, like regular growth pace going for. I mean, of course, you'll have these ups.
Bro,
and
you got to
downs
be careful with the hands.
Yeah.
Honestly,
yeah.
Lower those hands. You're doing the Elon thing there.
It's okay, man. It's all right. But you see the point that I'm trying to make, that when it comes to it, people always have these high expectations. And it's not to say that you need to sell all the companies that have high expectations and buy the dog companies that are shitty because their low expectations can reverse. Like, no, that's not what I'm saying. I'm saying that in terms of mean reversion, when people are, it goes right back to the fundamentals when it comes to investing.
Yeah, but I honestly, I want to go back. Like, do you have a problem with the current valuation of NVIDIA today? Or you're saying that there's not a lot of room for it to continue to grow? No.
It's good. I just said it's going to CAGR at about 20% year over year for the next 10, 15 years, right? I think that is so. We have no clue. Imagine what you were to say about 2025 and 2026 3 years ago. How would you even be able to model out what NVIDIA was going to do? Well, the couple of things right now that we have to take into consideration. Number one, you're hitting limits on the grid capacity, right? So right now, all these data centers, everything is being built out. So you've got grid capacity concerns. So that's going to slow you down. Another thing that's going to slow you down.
But that only strengthens purchasing the most expensive and best performance per watt chips. So if energy is the bottleneck, everyone is forced to buy the best chip that they can get the highest performance for the amount of energy that they have. That forces to not only buy NVIDIA exclusively, but re-up on their most efficient chips.
I mean, if you think about it, there's going to be a marginal cost pressure. Like, hey, I'm not going to just dump the 2-year-old GPU that I bought, 2 years ago to buy the newest one from an efficiency standpoint. It's just the quote unquote, the thing that you have to remember is, yes, efficiency does matter, but it only matters if the cost of your old what is it called? Your old GPU hasn't deprecated to the point where it makes sense to do the upgrade. Because just because you want to save a little bit on electricity doesn't mean that you're going to get rid of your older stock, right? It's like, oh, look, I can save 20% on electricity if I buy the newest GPU because the new GPU is super efficient. I need to, and not to mention, it's not just buying the new GPU. You got to buy all the new racks. You have to buy new cooling. Like Blackwell's cooling requirements are way different than what the previous generation was. So it's not just a value add.
But that's not any different to any of their competitors.
No, I agree. I agree. But the thing is, the other competitors, they're not reliant on this one avenue for most of their growth. Right now, NVIDIA's growth is dependent on people buying their GPUs. Meta is actually banking on monetization and utilizing the AI to upgrade their what is it called? Their ad targeting platform to become more and more efficient. And this way they can keep selling ad space. Google, same thing. They have like all the models that they own, the software that they own, YouTube, so they've also got a monetization engine with their advertising. And they, like I said, they're using these GPUs internally. So they're protecting their margins. The challenge is NVIDIA does not have that same second line of business that's non-cyclical. If the semiconductor cycle starts to slow down, even temporarily, and this is something that even, what's his name? Zuck said, look, the risk that we have right now is under investing in AI. So we are going to spend as much money as we can on it because it's working out, it's value creative to shareholders. But if we find out that the value creation is not as good as we had hoped, we will just fine tune ourselves and actually just go back to a leveled capex again.
Yeah, but that's a bunch of that he's saying that for shareholders. The truth is, he said, if we end up ruining $300 billion in pursuit of AGI to stay in the game, that they're ready to do that. In all the companies are doing this. The only one that's not doing that is NVIDIA. Meta's stock is being taken down, which, by the way, I didn't know that was the argument. I didn't know this was a NVIDIA versus Meta conversation. I thought this was an NVIDIA versus Google conversation.
It's not an NVIDIA versus. No, this is just to say that there are opportunities sometimes in the market for secondary companies that have been.
You could say
oversold
second tier. It's
because,
fine.
Yeah, but they've been second tier companies because they've been oversold. Not oversold. Let's say their valuation gap has widened significantly because people have prematurely accepted the death. And people, instead of looking at, the companies that are still performing, people want to just keep buying the high flyers. People are just like, no, I'm going to buy the top of the dog no matter what the price is.
My biggest, stock that I've been buying recently has been Meta. So I completely agree. I'm on the Meta train.
Oh, there you go. So this is a Meta hype boy. There you go.
This is not even new though. Everyone that watches my channel will tell you that I've been talking about Meta a lot.
I'm sorry.
Steve, me and you have gone live many times with me talking about buying Meta.
I know. I'm just saying I love it. I'm not allowed to say I love it.
No, you're allowed. What are we doing this? What are we doing this stream for? We all agree. Buy Meta. There you go.
Yeah. No, I literally, I think Google, Amazon, Meta, NVIDIA, they're all going to do very well. I love the advertising names. I've been bullish on the Trade Desk, AppLovin, Reddit, Meta. I'm no longer bullish on Trade Desk and AppLovin right now. I'm going to go more on the consumer side. I like companies that are in advertising that own the consumer. So Amazon, Facebook, Reddit, bullish on all those names. But I think people are calling off NVIDIA way too soon. Like you look at the multiples on this name, I don't even think they're that extended. And we're re-accelerating growth. Next quarter is going to be 65% year-over-year growth. And I honestly think that there's a certain level of compounding where it just doesn't work in their brain anymore. That is so unbelievable. You're surpassing, they've already surpassed the amount of revenue that Facebook is doing or Meta is doing. They're going to absolutely blitz past it. Margins are extremely high. There's no CapEx worries. Everyone's saying Google's going to eat their lunch. They don't have the partnerships or connections in order to scale this out. People are worried about AMD and Broadcom and all these things. Nothing has come to fruition yet. Nothing. And so I think these I honestly think everyone wants to sell off Nvidia. I think they think it's too good to be true, and any article brings it down. But until I see fundamental change, I'm not going to change my thesis on the name. The truth is they continue to blow past people's expectations and raise numbers. And from every single big spender that we've seen last quarter, they all said CapEx growth is going to accelerate in 2026. That's only going to push more demand for NVIDIA.
Let's not forget the $755 billion in backlog for cloud, just from 3 companies.
So one thing people keep saying, Chris has no idea about TPUs. Look, I'm looking at this from a business model perspective. Okay, I'm not looking at this purely from, oh my God, the value creation in Google is the hardware. That's my core thesis, and I think that's why Google is undervalued. Like, no, Google is an operating business that generates free cash flow, and it generates a significant amount of free cash flow. So that is the thesis that I have with Google going back. It wasn't like, oh my God, Google is dog shit and NVIDIA is the greatest thing. No, and I'm not saying the opposite right now. I'm not saying NVIDIA is dog shit and Google's shitty, you know? I mean, or Meta's a great company. All I'm saying is from an investing standpoint, you have to look at these companies from a business model perspective also to see, okay, where's the durability? One of the reasons why I think a lot of people are down on NVIDIA, quote unquote, after their earnings where it hasn't gone up, it's not because NVIDIA is not performing. Clearly, they just blew out the quarter, and yet they're not at 230, 240 like they should be. Why are they hanging back? Because some of these other super investors, they unloaded their position. SoftBank unloaded their position. So the perception right now in the market is that, oh, NVIDIA is the done story. That's it. Like this is where the challenge is. So when the market sort of turns, that sentiment turns, you know, you gotta look for the companies. I think eventually, if NVIDIA gets sold off enough, I'll be a buyer of NVIDIA. You know.
Yeah. I just don't know how. I think it's really hard for the human brain to try to understand compounding growth. You know, What's the difference between a company that compounds at 15% versus a company that compounds at 20% over a 5-year period?
A lot.
It's significant.
It's a big difference.
It's a big difference.
Whenever you start talking about companies that are compounding at even like Google, I love Google compounding at 15%. And then you look to NVIDIA compounding at 60 to 65%. I mean, you need a couple quarters to double that growth.
The question that I have for you is, like, what do you think is going to be the terminal growth rate for NVIDIA going forward? Do you think at some point there's going to be a lull in demand and you're going to see growth rates drop from 60 to 70% to maybe 20% year over year?
Yeah, eventually. I do think that we go into maintenance mode, but I'm also thinking at these multiples, you know, let's say that happens at the end of 2026. Where are we sitting on a multiple, like on a PE basis? Like what? We're sitting at 15 times, you know? Like
no, the problem is the market's forward looking, Tanner, right? So if you're asking me like, hey, Chris, I think if you're telling me like, look, NVIDIA's growth rate is going to slow down to like 20, 30% in 2027, you know, me as an investor, do you think I would rather be in a company that's going to slow down its growth? Would I pay a really high multiple for a company that's going to slow down its growth early? Or would I, especially if I was a big investor? I'm not talking about.
Well, I don't understand the really high multiple. Like forward PE, they're the second lowest in the Mag 7. There's no big multiple here.
What's NVIDIA's forward PE?
17.5 times. No, I'm sorry.
No, that's 2027.
I didn't look to that. I'm sorry.
It's like 26 times, something like that.
It's not.
And the only one lower than it is Meta.
Yeah. No, I mean, Meta's there. Microsoft is there. Amazon is there. Well, Amazon, you have to.
Amazon's sky high.
Amazon is.
It's 19.4 times 2027 earnings for NVIDIA.
Yeah, but 2026
for next year.
Yeah, next year
26.7.
Yeah, they're the second lowest in the Mag 7. Like I don't understand what the big premium is. Like we're growing at, you know. And by the way, this is just got re-rated because everyone was wrong a quarter ago. Everyone thought that potentially, you know, growth would be under 60%. And then, you know, guidance was going to be essentially $4 billion lower than where we were. They all had to rewrite. And by the way, this is guidance that's factoring in zero Chinese growth. Okay. So there's only catalysts to the upside. Well, that's not true. I can't say something like that. There's always something that could happen, but China is the second largest market in artificial intelligence by a large margin, and NVIDIA doesn't even play there yet. And people are thinking, because the market cap's very large, that they have nowhere to go. So I've made and will continue to make a bold prediction that NVIDIA will be the first $10 trillion company. I don't know when that will happen, but I don't see how that can't be possible. It's the same thing that like Elon has said many times. There's creating a prototype, and then there's bringing it to scale. And that every single time that there's a new ASIC custom silicon that ends up coming out and that a company is just interested in or exploring, NVIDIA's stock gets sold off. Let's see how you actually distribute that across the world. Let's see you actually bring that to scale the way NVIDIA has. NVIDIA has been able to distribute hardware the way no other company has been able to do ever in history. They have partnerships that have been, created across multiple decades, software that's taken decades to create. That software hardware integration, Google's very good at. I will agree. They're probably the top two companies that are doing that, NVIDIA and Google, but it will not be easily beat by any company. I think they're all going to do well. I'd love to have a position in Broadcom. I think AMD will do great. But
am I adding this to stage, Chris?
Yeah, go ahead. So from an EV to EBITDA multiple, enterprise to earnings before interest, taxes, depreciation, NVIDIA right now, not next year, right now is 38.9. And Google is about 26.34, 35. Let me just shrink this so this way we're not seeing that giant wave. By the way, Tanner's also sponsored by Fiscal AI. Someday,
Fiscal AI / future.
I asked what's his name. I was like, can I invest in this thing? Because they have a lot of people who are content creators that are on this platform. Okay, so
It's
Google right now, it's awesome. If you're an investor, Fiscal AI is something that once you get used to some of the nifty features on it, it's amazing. And it saves me so much time because I'm always just going to the earnings and stuff. I don't have to go to the investor relations page anymore and put my name in. How annoying was that?
I'm on Google Sheets a lot less than I was before.
Yeah, me too. So look at this. So Microsoft EV to EBITDA is 19, Meta's 15, Amazon is 17, and NVIDIA right now is at 38.92, but that doesn't mean their EBITDA growth rate is significant. So I think that there's a way to see this on a forward basis. Let me see. Forward. This is where we have to, okay, there we go. Forward EV to EBITDA multiple. Let me just hide the other ones. So on a forward basis, let's see who's cheaper. There you go. NVIDIA is still the most expensive. On a forward basis, they're 21. Now, the question is, if it drops about 16, it might be worth looking at a little bit further. But right now, in terms of total valuation, at the low end, it's Meta at 11. Then you've got Amazon at 12. You've got Microsoft at 17. Google at 17 now. Apple at 17. No, Microsoft at 17. Where's Apple? Did I put Apple up here? I didn't put Apple up here. And NVIDIA at 21. So no, NVIDIA is still pretty expensive from an EV to EBITDA multiple. So enterprise value to EBITDA.
Yeah, I think that's fair.
Yeah. That's what I'm saying. I'm not saying that, like I said, NVIDIA is a bad company and they're going to do really well, but in terms of total valuation, this could get re-rated higher. And so I'm glad that you told me you're a Meta buyer. We can pump Meta together, Tanner.
Dude, this is actually a thing that a lot of people watch creators and stuff like this. I don't think creators watch creators nearly as much.
We don't have enough time to, man. It's hard.
Yeah,
it's really hard.
So I probably haven't been telling you guys, but over the last year or year and a half, I've just been rotating my portfolio to Mag 7s. Like I've
Where'd you get that idea from?
Steve wants to take a lot of credit here, but
I mean, I've told
You
been
helped.
telling you the bigger just going to get bigger. At least give me the credit. I convinced you on Alphabet.
yes, yeah, on Google, you were the man, and Chris too. Honestly, I was very wrong on Google for a long time. There was a time whenever Google went to like the $90 range when ChatGPT was doing extremely well, and I would still bet on ChatGPT today. Like I've got a big belief in that company. But I think something clicked. I started really accumulating in the 140s range in that sort of dip, 150s, all the way up into the 200s. And I just realized that they are going to have the best cost to serve. They are going to they have the most customers, the widest ranges of distribution in terms of consumer and enterprise. Look at this disrespect that Chris is putting on stream right now.
It's disrespectful to me. Look at this on a forward basis. Where Palantir is. 123, man.
I always like looking at like the forward P's or something of like the Mag 7, and then you look at it with and without Tesla. It's quite interesting.
I'll put Tesla on there for funsies. Let's see. Tesla. I should put Apple on there as well. Okay. Yeah, that's Tesla right there.
Yeah.
On a forward basis. But see, the thing is, this is what I mean by the market evaluate a company based on sometimes potential, right? Like, so if you look at Tesla, there was never a time where Tesla was just like trading at a EV to EBITDA that's lower, at a reasonable EV to EBITDA. Why? Because everyone always looks at Tesla from the angle of, oh, they're going to have Optimus, they're going to have this. So the expectations have always been super high for Tesla, and Elon does a really good job of promoting that hype. And so people are always willing to pay a very high multiple for it. And so a lot of times, this is where I think, like me as an investor, I've made mistakes in the past where I've become a little too dogmatic in that, oh no, from a fundamental standpoint, this is overvalued, right? But then you have a CEO who's coming out and just is really good at talking up the growth in the future. And basically the stock has just, gone to that high valuation, and it's stayed there for a decade plus, so.
Yeah. I've been recently talking a lot about culture in, I've been calling it sort of the invisible metric that maybe someone who uses fiscal AI a lot would not be able to value what culture is. But it's something that I'm going to use more often in my investing strategy, and I think will help me find those next, people like
winners.
Jensen, Elon, Alex Karp, Vlad Tenev, all these people who have these extremely strong relationships with their team. They're high trust organizations, so they allow them to move much faster. And I've just been learning a lot about that. That's sort of been my little theme lately. If you can have a team that's built on shared beliefs, unique shared beliefs. So that can be with Brian Armstrong and the Coinbase team. They all believe that crypto is going to be a thing. Or
how did you feel about BMNR today?
Good, but honestly not any different than yesterday.
Well, it's nice that it didn't go down. How about that?
Yeah, no. It's always nice when it's green, but they are building up quite the cash position. It's crazy. They've gone from essentially $70 million up to $800 million.
Oh, was I right about the dilution or not? You see how much they diluted? They said that there were 385 million shares outstanding.
Yeah.
When we were talking about in the group, I was like, no, their dilution machine is just on another level. So, but I mean, look, they're in accumulation mode. The question that I have with BMNR, then this is the longer term thesis is after the Fusaka upgrade that's coming December 3rd, what is the burn rate of Ethereum going to be? And I think this is where Steven got me interested in it. I was never really a crypto guy to begin with, guys, but you know, some of the stuff that Steven sent me, I was like looking at it from just purely from a business standpoint. I was like, wait a second, like you're starting to see all this stable coin issuance. You're starting to see all these people utilizing it. On one hand, you're starting to see fundamental changes in how Ethereum fees are going to change after the merge. I think Tom Lee is just trying to get ahead of it because he knows that the burn rate is going to be 3 to 5% per year. So if you think about this way, if you have Ethereum on one hand, you've got share buybacks in the form of burn from blob fees, and then you have dividends that come from staking. So you've got this, you know, a company like underlying asset that's paying you dividends and at the same time buying back your own shares. Yeah. And it's compounding every year. That's the thesis that Tom Lee has. And Tom Lee's thing is the market will eventually recognize this and give a premium to Ethereum in the future. And, you know, in the short term, volatility has basically died in the crypto segment because of the whole thing with Binance, which I think is the dumbest thing because it's something that hasn't fundamentally changed the value of Ethereum, but it has changed the perception on value. So people are just like, I'm not going to pay a MNAV premium on BMNR. I mean, today I think that MNAV actually went up because Ethereum only went up by, I think 5%, but BMNR went up by 20. So now your MNAV actually expanded.
Yeah. Yeah.
You know, so.
Yeah. And then there was a report that maybe BMNR bought around 80 million after today in Ethereum. There was a
interesting
on-chain analysis thinking that they bought an additional 80 million tonight.
Yeah.
No, I'm a believer. I think that that's a good way to look at it. I think a lot of people have these beliefs that Ethereum's a scam. I honestly think it's harder for me to wrap my brain around Bitcoin than it is to wrap it around Ethereum. Ethereum feels like a Visa or MasterCard, like a real business that, you know, network effects, a better technology, increased security. And for that, they're receiving revenue, they're burning, or they're buying back shares essentially by burn. And then you also collect a dividend that helps you secure the network. I can wrap my head around that. I find it harder to wrap my head around Bitcoin or some of the other ones that are more stores of value.
I agree. I'm in the same boat. Like, I know some people saying, well, you can transact with Bitcoin too. I'm like, no, you can't. Like, you can't do it efficiently. Like, even people who are in the banking sector and finance, they'll tell you, like, the way that the protocol has been set up, like the amount of high frequency moves that you need to make, you can't move. And that's one of the biggest limiting factors for Ethereum that they're going to be fixing after this upgrade, right? Where the amount of transactions per second is going to expand significantly. And so a lot of companies that did work on layer 2s could theoretically, a lot of stuff could move to layer 1. But the only risk that I see with Ethereum, and maybe you guys have some color on it, there are more companies now developing their own layer 1s. Mm-hmm. What do you guys think about that? Like, you know, like USDC and Tether are both right now under the Ethereum ecosystem, but
Stripe,
you know, let's say in the future, but yeah, Stripe is doing now their own L1. So it's like, hey, they want to move off of it. So if you increase the blob fees, you know, at some point, some of these guys may say like, wait a second, you know, because what if I just built out this thing myself? Would it be easier? Would it be better? They control all the validators themselves. They're not giving away any margin. Like, the question is, would that work?
Yeah. You know what? I think it's one of those things. Same thing with a lot of customers leaving Galileo. You've also seen that from SoFi. A lot of them have left and then come back, you know, and we've also seen some teams do that with Ethereum that were developing on other chains that have migrated their projects back over to Ethereum after leaving them and then coming back. So it is a concern, but I don't know how successful it's going to be overall.
Yeah.
However, it is some good teams. Tempo looks good. Arc looks good. Like some of these do look pretty interesting.
I'm impressed.
But,
I'm impressed, Tanner. You're very well in the space. You know who these people are. That's awesome.
Yeah, I'm a shareholder.
Yeah.
But another thing I wanted to add on to this, this is another interesting thing because I see this get passed around from time to time, is the stablecoin supply sort of topping out. If I can share this
Yeah, by all means.
on screen.
Go for
it. Stablecoins have sort of topped out and hovered a little bit in the last couple of weeks. And that's been also worrying some people. But if you go ahead and, where am I? I'm too zoomed in. Take a look at the, let me go over here. Look at the chains that are actually winning over the last little bit. I'll go to like the last month where we've been dipping. Ethereum is not one of them.
Yeah.
There's been people leaving Solana, Arbitrum, which is has an L2 on Ethereum, Plasma, a lot of leaving over the last month of those stablecoin chains, but Ethereum has boomed. So the concentration of Ethereum continues to climb in the stablecoin space, and they have not seen a dip in all of those bars. If you take a look over time by chain, that Ethereum continues to gain weight.
Yeah.
It's pretty exciting. So I
Isn't
don't know.
Isn't that red one? Can you bring that up? Is that Tron? Isn't that like that? That's, I want to call it scam, but isn't that the one that like is being investigated for like illicit Chinese manipulation of like money around the world or something like that?
I don't know. I remember seeing a bunch of reports of Tron that had, it was something like more transactions than Visa or like it was some insane statistic, but I don't know much about Tron. I do know they're very international, though. I don't know if they're here that much.
Oh, right here. Take a look. Nearly half of his illicit crypto volume happened on Justin Sun's Tron last year. So, like, yeah, and China's been cracking down on it. So I think I have to do more research on it. But if you think about it, even from that chart, like the second biggest one from transaction size is actually not a credible one for future DeFi and platforms. So yeah. Damn, man, you got me more bullish on Ethereum all of a sudden.
If you look
I didn't know
total,
that the transactions were growing. Yeah.
The total stablecoin supply changes by chain over the last 3 months, you've seen essentially $24 billion get added to Ethereum and about $4 billion leave Tron. So there's been a big swing there as well.
Yeah.
Yeah. No, BMNR and Ethereum are really cool. I just I think people feel the pain a lot whenever holding on to stocks, and you feel the losses twice as hard as you feel those gains. And so whenever it's going down, people are just like, oh, it's a scam because we're losing. It's like, dude, like this is a public company. It's not like the money that's being lost is going into Tom Lee's pockets. Like some people feel like somehow there's some sort of loophole where the dilution is going into his pockets somehow. It's like the business model is pretty simple. They're buying Ethereum. and the hope is that the utility of Ethereum is so good that it continues to grow over time. That's not for you, Chris, but that's for the average complainer.
Here's a question to you then about the other biggest DAT, MSTR. Are you bullish on MSTR going forward, or do you think that they're going to have some serious structural problems with their capital structure? Because the only argument that I have with MSTR now is that I honestly don't know why they trade at a premium to MNAV. If they ever really, because now they've got all this debt servicing costs, which by the way, they can do very easily, but that means that every year Bitcoin needs to at least grow by 10% per year. Otherwise, you're basically just losing value, right? And there are like some people that are like calling MSTR a Ponzi scheme. What's your thoughts on that?
I don't really follow MSTR like at all, unfortunately. I listen because Tom Lee tells me to listen, but like I said, I don't really. I do hold Bitcoin, but not a lot at all, and I don't really see it that much. But yeah,
The only reason why I'm asking is because sometimes what happens is people will use like MSTR as a proxy for BMNR as a way of saying, oh, well, this is a DAT and this is a DAT. So if one DAT is going down, another DAT should go down. You know,
yeah.
like there's that whole argument there. So that correlation. So the thing is, like, if the valuation on MSTR gets cut, you know, or goes down, then people are like, oh, wait, this whole idea of a digital treasury is a stupid idea. You know, and I'm like looking at this and I'm like, from a business standpoint, you've got one DAT that's going to be positive in terms of value creation from just the staking feature, where there is no staking feature in Bitcoin. There's just whatever the value of Bitcoin is, right? On the other hand, MSTR, you're going to be losing every year a portion of your cash, portion of your returns from paying out dividends to preferred shareholders. Like the capital structure for BMNR is not like that. So some people were calling on Twitter like this weekend. They were like, BMNR is going bankrupt. And I'm like, how do you go bankrupt with no debt? Like,
do you think that they will evolve and get a little bit creative with the way that they raise capital?
No. Tom Lee's made that very explicitly clear, that the one thing that they don't want to do is complicate their capital structure. You know, and the thing is, if you're generating an income, you can use that income for a lot of things. I mean, they talked about doing a dividend now, you know, so
Yep.
Some people that are interested in dividends will buy it. So the MNAV will expand a little bit. So I think there's better business case for BMNR than there is for MSTR. On the other hand,
I think
yeah,
3% goes a long way. I think it changes the entire investment thesis. Like,
yeah, 3 to 5%, because I think they can actually get some boost from being a really large validator. Because the way that it works is, if you're a small validator, you get a certain level of rewards, but if you're a bigger one, you get a bigger piece of the reward pie. And so the APR could actually be closer to like 4 to 5, not just 3. And so if we do go into a lower rate environment in the future, on one hand, you've got deflation coming in from, you know, from the burn, from the blob fees, and then you've got staking dividend that's coming on the other hand. So imagine right now your share count is shrinking by 3 to 5%, and then you're getting a dividend of 3 to 5%. That's pretty good value creation.
No, and another exciting thing that I like is, because this is an L1 and supposed to be essentially a network, if they go into, Tom Lee calls them moonshots, they could fund a bunch of, you know, exciting projects that are L2s or creating other things on Ethereum. What does MSTR do outside of Bitcoin? There's not many businesses being built on Bitcoin, and they can't keep accumulating without risking, you know, having too much of Bitcoin. So like, I've never really gotten it as much as I understand Tom Lee's business. However, he should sell Orbs Holdings. I've got no business in WorldCoin, don't care about it, and Dan I should never have attached his name to it. I think it's going to go to zero.
Jeez, I haven't done enough research on it. I don't have enough. I've done enough research on it. I couldn't tell you.
Yeah, I don't know. That was also so funny too. Is like, whenever they originally invested the 20 million, and then you know, it went up like more than 10x or something. Everyone's like, yeah, no, look, he just made all that money. I'm like, they only make money if they sell. It's going to go right down as things, as people realize that they're like, wait, why are we holding on to this? Why did Dan Ives attach his name to this?
Are you long on like Circle by any chance, or any of the stablecoin issuers?
No. I don't understand how, and this is true. Like, honest, I'm more asking a question. What can Circle do that a JP Morgan or a SoFi is not going to do first? Because now Circle is trying to get their bank license. They want access to Fed accounts. Like, what? I don't understand. Like, I like the business, but it's very easy to replicate a stable coin. So that's a little bit of my concern.
I think the thing with companies like Circle and everything else is that their business because they're first movers, they quote unquote have some first mover advantage. That's like the main thing that I see behind it. But
Yeah, but
outside of that,
network advantages. Like
I mean, they have
interoperability in
Coinbase.
crypto is like a standard now.
They have Coinbase, right? So anything that's done on Coinbase is stablecoin is primarily Circle. And I think the relationship there is that half of Circle's operating profits, they go back to Coinbase.
So why would I be interested in buying Circle? I'd be interested in buying Coinbase.
True.
But if you have a different take, like I really do want to know, like what is it? I know that
No, I mean, that
extremely high margin businesses, but isn't like,
I mean, they were talking about it this weekend on what is it called, on All in Pod, and basically Chamath brought that up, that I think the CEO of Tether, they were doing the same thing where they were cleaning up their balance sheet, making sure everything was lined up, and so they were going to take that income that they got from the premiums from the interest that they get from buying treasuries against it. And remember, they have to all buy short-term treasuries, which are getting a 4.5% yield on those. So to taking that income and then putting it towards like moonshot projects or like projects that could theoretically increase value over long term. I mean, you know, there are certain,
like people are getting excited. They're explaining what banks do. Like, you know, like,
yeah.
Welcome to what banks have done forever.
Yeah, exactly. Whether you call it a stable coin or you call it a bank deposit, it's pretty much the same thing.
Yeah, it's like tech bros just found out what the finance industry's been doing this whole time.
The only difference is liquidity. Like when it comes to these stable coins and everything else, it's like immediate liquidity. And that's the thing that CoffeeZilla was trying to call out Tether for, saying that if you're unaudited, you've been issuing all of these Tether coins, what's actually backing this stuff and how liquid is it? Because the thing is, like banks, they have this
US
issue.
Treasuries that's backing everything.
Well, I mean, yeah, and treasuries are very liquid short term. The problem that you run into,
and they get to collect all the interest. Don't forget.
No, that's 100% true. But the challenge is, Stephen, if there's Tether had a point where CoffeeZilla was trying to investigate, like, what are their actual holdings, right? And they couldn't like provide like an audited statement of, okay, these are the exact treasuries that we hold that we can liquefy and pay out to shareholders, not shareholders, to token holders if we need to, you know? Like there's a certain level of cash that you need to maintain. And then there's a certain level of like treasuries that you can't just be 100% treasuries. You have to be, certain level has to be in cash. So I think there was this, I don't know. It was like I said, it was something that CoffeeZilla was talking about, which I was like interested. I was like, what kind of like auditing mechanism is there? And they were also not based in the US. And because there was no legal framework for this whole thing to happen, like the stablecoin thing, you know, people were like, well, it's like the Wild Wild West. And it was like FTX coin, you know, where there could be some discrepancies on the underlying assets that are backing this stuff. It may or may not add up to one, which is like, wait a second. So why would you value the stable coin at one, where it's supposed to be a proxy? But at the end of the day, there's the bottom line, like one does not equal one. And I think that's the challenge that people ran into with FTX. So people are, people are questioning Tether in that same regard. So,
but doesn't that just go to push all those investors and other institutions just be like, okay, whenever JP Morgan creates this, the way that we trust them with all of our other assets and payments and everything, that they're going to run this game?
Yeah. PayPal is doing the same thing right now. PayPal is doing their own coin, and they're
floating onto the scene.
You know what? That's something that we definitely should talk about on White Boy Weekly. I would love to come on to a plan meeting and talk about PayPal.
We talk about PayPal every week.
What is White Boy Weekly? It's the thing that you do on Fridays. I know you guys call it FinTech Frenzy. I'm just making fun of it. I'm just calling it White Boy Weekly.
FinTech Friday. My old show is called FinTech. But yeah, White Boy Weekly. That's funny.
Okay, so is it FinTech Frenzy? Is it Financial Frenzy, or is it?
I'm calling it FinTech Frenzy because Tanner's not.
So the name of the show is FinTech Friday. Okay. My old show used to be called FinTech Frenzy, which was my daily stream. But then I branched out because I wanted to talk more about Meta and NVIDIA and all those things. So now it's just Tech Frenzy. And right now that show's on pause right now as I'm doing the market monitor, ladies and
You
gentlemen.
see what I'm saying? Like, I'm not the one that was losing it. I was like, what are they calling it this time?
Yeah.
It just kept, they just changed their names 4 times. So that's why I just called it, like, White Boy Weekly.
It changed its name one time, but it's just confusing with the other shows that I have with very similar names. But yeah. It was SoFi Weekly to FinTech Fridays, but yeah.
Yeah. By the way, I know a lot of people give PayPal crap, but I think at some point PayPal's value is going to show up. The only thing is, in the short to medium term, people are just not recognizing PayPal for what it is. They're like AutoZone at this point. The question is, are they going to reaccelerate their revenue growth? And I don't know if you've noticed it, Tanner, but they've actually started to.
Yeah.
I don't think the market has picked up on it yet.
You know what? Did you listen to the most recent Fireside Chat?
Not yet. No.
You should. It's the most bearish thing you'll.
Really?
Alex Chris essentially did a Fireside Chat and just said that he did not expect the turnaround to be as slow as it is, and that there's no real way of accelerating it, and that the old management had no control over the way that code was being entered across 35 million merchants. So they have to go through with individual engineers and go through spaghetti code in order to get onto the new PayPal complete payment. So in order to upgrade them to the new live updating higher conversion solution, which is what they want to do for 35 million merchants, they have to do it one by one.
Sounds like a project for Elon.
So he said, yeah, it's a lot harder than we thought. There's still cool things that we're working on, but the problem is with investing in PayPal is I do not think time is on their side. So it's extremely cheap, but the interesting thing about investing in innovative, very fast-moving companies is that time is on your side. If people don't see the value, okay, well, give it time. Elon will keep building. Vlad will keep building. Like eventually, people will see the value. That's fine. If people don't see the value in PayPal, all you're giving is more time to Apple Pay or Toast and other of these merchants to take on POSs, or Stripe and other unified commerce solutions to take market share. They are not really taking market share, and that's my big concern. They're growing TPV, but the world is growing TPV.
Yeah. Like, take a look at this. Can you show this, Steven? So this is what I noticed, like a reacceleration in revenue, but that just could be year-over-year comps that are causing this, right? But
No. It is. There will be some comp things there. Take rate continues to fall, but Braintree is going to reaccelerate. PSP volume is reaccelerating. You will see that over the next couple quarters.
Yeah, and I mean, even from an earnings standpoint, earnings are growing at a pretty good pace because of all those share buybacks. I mean, you're looking at a earnings CAGR of about 38%. So I think eventually the value that you will get from share buybacks will eventually translate into something. My only thing is, this is the suggestion that I had, which was, I think PayPal should utilize its breadth, especially because it's so international, to buy a neo broker like Webull, right? And then start working on developing like more products, right? I mean, I don't know if they can buy Webull, to be honest, or if they can launch their own brokerage service. But the one thing that I see that's going to be a long-term grower for the next like 10, 15, I don't know how long, is the number of people that are going to be trading in the future is going to be more than there are today, and by a very wide margin. The penetration of people in the stock market today is the absolute lowest it's going to be ever. Why? Because more and more people now have this in their pocket. You remember what I said when we were in Vegas? I said the game changer was this thing right here. This is a mobile casino. This right here, everyone in the world has one of these, and they can go onto it, whether you're the poorest kid in the middle of an African country or you're the richest person in the middle of, of Monaco. Everyone's got a phone. Everyone's got the ability to trade and buy and sell stocks. And now, because of just how much return there's been in the world in terms of stock market, I think eventually people are gonna find their way into the U.S. markets. Not just U.S. markets, but international markets where companies are looking to raise capital, and there's going to be an entire base of people just buying and selling stocks.
But would you want to bet on PayPal for their brokerage, or would you just want to bet on Robinhood?
I right now would bet on Robinhood, but the thing is, if PayPal doesn't at least try to do anything outside of their core business, then what's the point? Like, this is where you got to give it to Vlad. Vlad didn't just say we're going to do options and stocks all day long and that's it. No, we're going to work with Sage to do mortgages. We're going to do like a bank. We're going to do a credit card. We're going to do prediction markets. We're going to do this. So it's not just, hey, I'm going to grow my core business, but let me go into these other verticals that are value accretive to my shareholders, right? Because if you told me, hey, be bullish on Robinhood, if all they really did was just the brokerage, no, they went into crypto. They went into all these other things that add to the bottom line. And also, and I don't know if you remember this, but Ahmed asked this really good question, which was, hey, listen, if we ever get like a bear market and trading volumes drop, how are you gonna deal with it as Robinhood, as a shareholder, you asked. And Vlad said very comfortably, he's like, no, we're gonna make sure we're very well diversified in our lines of business. So if one, slows down, we've got another to pick up the slack. So it's the same thing with PayPal. So PayPal right now, its total, transaction volumes are kind of declining, but dude, do something, get out there, like go to the next thing.
Many of the pushes that they've been going for, if you've seen PayPal Plus, they're trying to become a little bit of a bank. They're collecting direct deposit. They want to be able to spend on Venmo, so people aren't just using them for peer-to-peer transaction. They're going sort of that direction. So a lot of picking up more spend, not just e-commerce, but commerce in general. So debit cards, credit cards, buy now, pay later, those sort of things. Those have been really big.
I'm concerned about buy now, pay later. I don't know about you guys, but I think buy now, pay later is what is going to implode sooner rather than later. It's not good. It is not good.
Well, if we have a risk in credit, it's definitely going to implode.
Dude, you're talking about people borrowing money at like crazy, well, they're not crazy rates, but the thing is like the fees and everything else, but they're buying groceries on buy now, pay later. Like you're talking about people that can't afford $100 bill and you're going to lend them money and you think that you're going to actually get paid on it?
Yeah, that part is weird. I do use buy now, pay later from time to time. If it has 0% APR and the merchant's willing to pay, why would I not use it? Whenever I bought my phone, I usually just buy an unlocked cell phone. But then whenever I was checking out, they go, hey, do you want to use Affirm and just pay over these next 2 years at 0% APR? So Samsung's paying my interest rate. Fine, whatever. Yeah.
I mean, it's the same thing with me with I haven't got a new phone, but I'm thinking about getting the the iPhone 17. I could just get T-Mobile to basically finance it for 0% for like 2 years. I'm like, I just take that money and put it into something else.
But the only problem with that is that they can lock you into a pretty interesting contract.
Yeah.
With the firm, they don't care what provider I'm with. It's essentially an unlocked phone. I just have a, bill that comes out automatically. I don't even think about it.
And what are the payment terms? Like how fast do you have to pay it back?
It's over 2 years. It's just on auto pay. It just comes out of my account. So I never think about it. I don't even know how much I have left. I just, the phone was like, I don't know what it is in Canadian dollars, but $1,600, $1,800, something like that. And 0% APR. Why would I not use it? Money's better in my pocket than it is in theirs. So I'll keep it.
Yeah.
So, I do like it that way. If you're going to buy a big item and that merchant's willing to pay, fine. But, it is scary whenever people are buy now, pay later-ing their burritos.
Yeah. Are you looking at anything interesting in the next 6 to 9? Or are you just going to...
You know what? I was going to say, because I've been dabbling in all these Well, oh, actually, you know what's a fun little company I've been looking into? I've taken a position in it as well, is Axon. Have you taken a look at Axon?
Yeah, it's in my ETF. That's something.
I freaking owned them at $20.
Yeah, but you sold
And I
them.
sold it.
Yeah.
Axon's super interesting, but no, the thing that I've been thinking about recently is like, should I dabble in names like PayPal or should I just buy Nebius? Because which one do you think is going to double first?
I'm no longer bullish on PayPal. I think there's tremendous value there. I think it's just going to be a tobacco company that doesn't really pay a dividend. I can't say it doesn't pay a dividend now. Nobody cares about PayPal. And the market has lost just any sense of excitement with it. So I don't think it matters what they do. I just think it's a broken stock, and it's going to remain a broken stock. And I'm actually surprised Visa or MasterCard hasn't acquired them by now.
I agree. And you know what? They might. The problem is you don't know if it's going to be this quarter or 3 years from now.
There's just better places to put money, in my opinion.
Yeah. Yeah. I think it's interesting to buy a company that's going to get acquired, but trying to time that is impossible. And I don't have any insider information, so I'm not benefiting that way either.
They're going to get acquired. And why would I take a chance on PayPal, even though the numbers are good, when I can just buy more Amazon? Like, that's the way that I'm looking at things these days.
Y'all better be careful. Roy's going to come after you.
That's fine. What's PayPal done? Nothing.
Roy's going to come
absolutely nothing.
They do have nice management team. You were looking at EV to EBITDA. You should look at those types of statistics on PayPal. It's unbelievable. I think they have like $8 billion in cash, or net cash.
Sure,
I think.
Let me ask you this: what's the reason to use PayPal? What's the reason to use it?
Secure transactions that you'll get a refund on no matter what.
Visa's got me covered.
Yeah.
And then what's the reason to use freaking what's the other thing that they own that I'm blanking on at the moment?
Venmo.
What's the point to use it? I have Zelle right in my banking app.
Yeah.
I'm just saying there's nothing freaking proprietary to them.
But you could just say, why use Zelle? I've got Venmo.
What?
You could say, why use Zelle? I've got Venmo. Like.
Okay, but you can say it for both things. So once again, it's not going to really grow the way people want it to grow. It's just not exciting.
Yeah.
I think we should just Mag 7 and chill, man. I don't even know why we're trying to.
That's what I'm saying.
Honestly, though,
I'm not Mag 7. It's Spectacular 6. Tesla's not part of it.
I've been thinking about that. Like Josh Brown was on CNBC today, and he's going, "Oh, there's all these extra plays in the market. Like, oh, look at all these different healthcare names and everything." I'm like, why even play these? Like, the Mag 7's growing faster. They're less expensive. Like, they've got higher margins. They're more diversified. They're in 100+ countries. Like, whenever you buy Microsoft, you're buying an ETF. Like you're geographically diversified. You're in multiple different businesses. Like, this is not just buying one product. You're buying
you're buying Windows, you're buying the operating system that all business runs on. You're buying Microsoft Office, you're buying Azure, you're buying SharePoint, you're buying all their cloud, you're buying a whole video game network, you're buying the #1 business recruiting site with LinkedIn. I mean, Microsoft is underlooked, and it is trading one of the cheapest valuations it's traded in a long time.
But not just Microsoft. I think Google's extremely diversified. I think Amazon's diversified. I think a lot of these like they're all just, and honestly, I think Meta's going to get into enterprise cloud one day too. Like, they all are going to be extremely diversified.
Google's about to hit 330. Jesus Christ, man. Dude.
That TPU story is pretty exciting.
Yeah, that thing is just moving right now. Yeah, I want to see. How did NVIDIA is down overnight 2%.
See,
I'm telling you, this is the thing. Like, when narratives shift, people automatically re-rate these businesses like it never happened. Like, literally 60 days, not even 60, like 90 days ago, NVIDIA was the best, Google is dead, and now the whole thing is flipping, saying, oh, GPUs are going to go obsolete and TPUs are going to be the next big thing. It's like, this is what the market does, man.
Well, and people seem to forget that NVIDIA just put up 63% year-over-year growth in revenue.
Yeah. Like sentiment is one of those things that like makes markets move hard in either direction. And the thing is that whether or not you believe it, people just look at the headlines or it might even just be algos looking at headlines to do analysis. You know, that's why I think we're getting such a great deal on Meta right now, because everyone is just leaving them for dead when it's like, you know, it's like I said, it's the easiest catch-up trade, very similar to Google, where people are just looking at it and looking at one quarter with the net income down. And it was like, it's a non-cash charge. Otherwise, they're doing well. They're doing really good. So, yeah.
Meta's like worse.
Meta's up a little bit too, nicely. All right, boys. It was good talking.
I muted myself. How long have I been muted?
For like
Probably
30 seconds.
Gee. I was just going to say, yeah, the narrative can switch on NVIDIA, but like we grew 63% this quarter, where we're expected to grow 65% next quarter.
And put up $65 billion in revenue.
And margins are expected to climb, by the way, to 74.8%. That, like, man, at some point, if it stays extremely like sold off on these great quarters, they're going to be one of the highest revenue producing businesses at extremely high margins, no CapEx, asset light. Like, they're well positioned. And then all they have to do going through is just, okay, we'll put a lot of money with Anthropic, we'll put a lot of money with OpenAI, we'll put with Nebius and CoreWeave and all of these companies.
I'm not convinced OpenAI is a great play. I'm really not.
How do you bet against a company that's grown from literally the fastest growing company of all time?
Easy. They're losing money. They're a one-trick pony, and they're betting against.
What do you mean? Why one-trick pony?
So what do they do? Answer me what they do for a business.
They have the largest LLM in the world. That is, whenever you think about artificial intelligence, will essentially be used in every single business, and every single consumer will be using it on their pastime.
Larger than Gemini at this point?
By a long shot.
Is it?
Yeah.
By a long shot, Steve.
Tanner's right.
Is it better than Gemini?
That doesn't matter. That is personal preference.
And let me ask you this. Do they make money or lose money?
They lose money because they're growing.
And how long are they going to lose money for? Expected.
Probably through to somewhere around 2027.
Right?
They said 2030. Like, that was what Altman said.
Yeah, I mean that might be true as well, but I don't know how you go this far and say that this has been poorly operated or that they're making the wrong decision.
No, what I'm saying is when you look at their competitor, their biggest competitor right now is Alphabet. Alphabet has all the data from the two biggest search engines, generate 100 billion plus of profitability, and they have every other vertical covered. Plus, they're making their own chips. And
don't forget,
they're off of NVIDIA. So
and they're tied into a lot of enterprises via Google Workspaces, Google, what is it called?
And they have their own cloud. So why would you not want a vertically integrated company over OpenAI? It just doesn't make sense to me, the valuation OpenAI is getting compared to Alphabet. Makes no sense.
I would like to see your guys' opinions of that. Early days with Google, Yahoo, and Microsoft all trying to figure out search. I mean,
I agree. But the only thing I'll tell you, though, Tanner, is don't get caught like me in BlackBerry, where I saw BlackBerry being the leader in 2006, 7, and 8. And because of I was like, oh, BlackBerry, it's the best company ever. Like, they're not going anywhere. And then they were slowly being disrupted by Apple, and I didn't realize it. And that's the thing. Right now, everyone's got the same kind of like, oh, look, they've got 80% of market share. right? And ChatGPT, they're the world. They're like, remember, the first company that did smartphones legitimately that were very popular was BlackBerry. And then somewhere along the lines, out of nowhere came Apple and just dominated. So
Yeah.
like that's the thing that I worry about ChatGPT. Like I was an avid ChatGPT user for a year. I just canceled ChatGPT and now I just use Gemini. Gemini is a lot better, you know.
Until the next model comes out. Like I just
True.
think it might be a little
True.
too early to call winners.
True. And that's the thing. ChatGPT may come out with like a crazy model the next time. And it's like, oh, wait a second. Maybe I'll go back to that. But I think that's one of the things that could be a very big driver of alpha. If we have access to the minute these things like land, try them out. And if they're really good, just buy the stock. Don't look at the valuation. Don't look at any of this other stuff. Just buy the stock, you know?
Yeah. Yeah. The problem with the big organizations too is that you're diluting how much change it's going to make in their earnings, because, you know, Copilot can be really great for Microsoft, but then you have to buy everything else. Like you can't just buy it. It's like YouTube growing in Google. It's like, yeah, it's great, but I can't just buy YouTube. So I have to buy, you know, Google Networks losing business as they go away from the open internet. And like you have to buy everything that's part of the organization. Yeah. By the way, I'm not a shareholder of OpenAI, but you know, if you're buying that AI play, you are buying a pure AI play.
Yeah. This reminds me of like Silicon Valley. Did you guys ever see that?
Dude, how great of a show!
If they don't put up revenue, or if you don't put up revenue, then is that the thing you're talking about?
Yeah, yeah. With
it is
Russ
true.
Hanneman.
Honestly, it's a true thing.
Yeah.
That's you're seeing it on Quantum and a bunch of these energy names. If they don't put up
Oklo?
Well, yeah, I didn't want to say it, but
Oklo is just a freaking idea right now. It's like a concept, you know, and it's like, and people are like, oh yeah, this is a $20 billion company. And then you've got other businesses that are generating significant cash flow, and they're like, nah, I don't want to buy that. That's a shitty
also
company.
Just real quick to the comment from Controlled or whatever on that. Maybe it's Contrailed. I can't see if that's an I. Altman is not a good leader as well. I think Altman has sort of exploded onto the scene, and so many people think that this is like he's sort of a new person to the field. Sam Altman's been in like the venture capital space for a very, very long time. He was probably one of the loudest names in the entire space, extremely respected. And the same sort of concerns that people have about Sam Altman today are the same concerns he's had his entire career, is that people don't know whether he is the most inspiring, you know, essentially an oracle of the future, or if he's a complete BSer and that, you know, he has malintent. I would do a little bit of research on Sam Altman's background. This dude has an extremely interesting way of thinking about the future. He's so different. Like, he does have some very interesting qualities. He's definitely an Elon Musk-esque, you know, first principles rethinker of industry. Like, he's pretty awesome. If you get past the, you know, might end humanity like personality. But he's done very well for himself, is all I'm trying to say.
He's definitely done well.
Yeah,
but even before ChatGPT.
He's made enemies along the way too, man. I mean, his number one enemy right now is Elon. Elon's coming for his neck, bro. Like, there's I don't know, like Elon's got like a vendetta against him because of the way that OpenAI kind of changed up its whole thing. And, you know, it was supposed to be a competitor to Google at one point, and then it kind of got turned from a non-profit into a for-profit, and Elon did not like that one bit.
Yeah. So. I don't know if, I don't know.
It's like Elon's life mission to take down Sam Altman. I wouldn't be surprised if one day Elon just comes out and says, we're switching to GP. Like, Jensen, if you don't like break your deal with OpenAI,
did you see what Elon said today?
No, what?
They're going to become the largest manufacturer of chips.
Really?
Great.
One more chink in the armor that is NVIDIA.
Um,
I did not see that. Where did he say that? Hold on a second. Elon wants to do like accelerated compute chips?
Yep.
well, also with the cars, he's also talking about having some connected inference-based compute on all the cars that are going around, which are essentially computers themselves. But like George says in the chat, Elon promises a lot.
Yeah, the thing with Elon is very hyperbolic in his assumptions for things, you know. So whenever Elon says this is coming out next year, it's usually like 5 years, you know, like the Roadster. I think the Roadster was announced in like 2017 and it still hasn't come out yet. And I'm kind of trying to understand, like, why is it taking so long? I mean, it's not like this is going to be one of those products that you're going to do like a heavy amount of volume on. So
Well, he talked about it recently. He said the Roadster that they want to put out is not even remotely the one that they demoed before, and that it's going to have many new features that no one has ever seen. He also said that the presentation for the new Roadster will be the best product demo, not that Tesla has had or that the auto industry has had, but that has ever been seen in any industry.
you guys got to see this epic response from Tom Lee. Look at this. So someone said to Tom Lee is a fraud. So his response was, Jacob, please subscribe. We'll take your fake money. Good times.
But gents, I appreciate this debate that we agreed to both sides.
It wasn't
on.
even a debate. We both agreed that everyone should just go out there and buy Meta, not financial advice.
But I'm gonna head out.
All right.
You do that. Enjoy your sauna, Tanner.
Yeah.
That's where you're going, right?
Yeah.
I knew it.
Everyone should use a sauna at least 4 to 5 times a week. And don't forget to ice your balls while you're in it. No one ever thinks about that, but saunas kill a lot of sperm.
I met this guy in Vegas. It's interesting, all the people that we met in Vegas, right, Tanner?
Are you talking about me?
No, not you. I'm saying like this guy. Like, remember Elite Options?
Oh, yeah. We met him.
We spoke for about an hour. He's long on Meta too now. Meta, time to buy the dip. I'm telling you, all the personalities are getting in it. I like this. Let's go. Pump my bags, son. Pump my bags. All right.
But we met in Vegas too for the first time.
Yeah, it was fun. Steve, next time one of these things comes up, you got to come, man.
There is something coming up. Are we going to BM&R's annual shareholder meeting
in Vegas? I should go. For the amount of money that I'm down on BM&R, I should definitely go listen to the bull case in person. Are you
icing
going?
my balls as we speak, Tanner? No sauna needed.
Are you going?
What?
Are you going to Vegas for the annual meeting?
I don't know. I haven't really thought about it, but potentially, yeah.
All right.
It'd be fun.
I'll let you know.
Okay, cool.
I might go. We'll see. All right, guys.
Bye, ladies and gentlemen.
Take care.
Later, Chris.
Later, Steven. Stay on, close the stream, and I'll talk to you for a minute.
Well, we got a couple of super chats. So.
Oh yeah, read it. Go ahead.
Chris, I joined your group a few months ago, but I haven't really been able to see what?
Message me on X. Okay. If you're having issues logging in or doing anything, message me on X.
So not to sound like a conspiracy across Europe, Wi-Fi went down currently on mobile across Europe. There's no, I don't know what DIS is or YouTube. Did you guys hear anything? I have not heard anything. And then you look bored, go grab your milk and cookie. I was actually playing with Gemini and ChatGPT.
What do you think?
I think the new model on Gemini is really freaking good.
There you go.
And I specifically purchased a ChatGPT subscription just to play around with it because the new model on Gemini. I think Gemini is really good. And I think
I
Alphabet's
don't.
got a better suite of products. When you think about Notebook LM, and I think you're better off paying $20 for the Google suite than ChatGPT at this point.
Yeah, I don't. By the way, I don't sell courses. That's not me. Not a course guy. I know some people want a course. I don't do a course. I'm not even good enough to sell a course. There are other people that sell courses that are way better at things than I am. I'm more like a pattern recognition finder, and I try to just, put my information out there. If people find it valuable, they find it valuable. That's it. So, look, Chris admits he's wrong at times. Yeah, absolutely. And sometimes
Everybody
I'm
gets
wrong.
things wrong.
Bro, and sometimes you're getting things wrong in the short term, you get things right in the long term. That's how it works. I was wrong on Google until I wasn't. Like, that's how it works. When you're telling people, hey, Google's a buy, these options are super cheap, relative to where these guys are going, and the market doesn't recognize it. It's like, oh, look, this guy's an idiot. He doesn't know what he's talking about. And then things rip higher and you look like a genius. That's just how the market works, So it is what it is. No worries.
Everybody gets things wrong.
Yeah.
It's
Anyone who thinks that they get everything right all the time.
It's never going to happen.
Yeah.
But I do think, let's send it on this. Where do you think the S&P ends this year?
I don't know, man. I don't know. This is like one of those times where, because like the Fed is so uncertain about the rate cuts and all this other stuff, like it's like hard, because we don't know what's going to happen. And now literally for the last 3 weeks, we went from, oh yeah, we're going to do 80% likely to cut to 20% we're likely to cut. Now back to like 80% we're going to cut again. And it's like, what the hell? And then all of a sudden, some people, like last week, the whole thing was AI is in a bubble. And now all of a sudden everyone's like, oh my God, Gemini just released this amazing new model. AI is no longer a bubble. It's
these people are ridiculous talking about AI bubbles. Ridiculous.
Yeah, it's like Michael Burry's like that, and Peter Thiel sold NVIDIA, and Mayoshi's son sold NVIDIA. And so now all of a sudden it's like there's a bubble, and it's like the other thing is, I don't know how much you subscribe to this, but anytime people say that there's a bubble, it's probably not a bubble. Anytime people don't say it's a bubble and everyone just goes with the flow, there's probably a bubble.
I mean, the way that I'm going to explain it is, in order for a bubble to form, something has to be inflated. Now, when things inflate, a bubble can continue to expand and expand and expand. We are still trading at attractive valuations. When I say attractive, the fact that Walmart is more expensive than the Spectacular Six is insane to me. And companies like Aklo catching a bid, when those get chopped in half, doesn't matter for anything else. So I don't think we're in a bubble, especially since there's over $200 billion of free cash flow being generated by just Meta, Amazon, Alphabet, and Microsoft. And I'm not going against the top CEOs in the country. These are the CEOs that build multi-trillion-dollar businesses. And who on the sidelines, don't tell me Burry is smarter than the combined CEOs of Amazon, Alphabet, Microsoft, Meta, OpenAI, Tesla. I'm sorry, he's not. And for people who sit on the sidelines that don't understand the businesses, to try to come up with the most ridiculous things, such as depreciation schedules, to try to call a bubble when the companies that dictate the future of technology are saying this is where we need to spend capital because this is where the roadmap is. Who the hell is anybody to tell them that's not where their roadmap is? It's just crazy.
Yeah.
So my thesis still stands, where I think the big companies are just going to get bigger. And I think Spectacular Six and chill for me, now that I own Microsoft, I can actually say Spectacular Six and chill is where I am, because I don't see a position where they're going to get smaller. How do you compete with a company that generates over $100 billion in free cash flow?
Yeah, but just remember, Steve, we can't keep saying that companies generates this much in cash flow, because I'm telling you, I'm worried when it comes to companies like Nvidia, that it is still fundamentally a cyclical business. It can't, if the cycle goes the other way and the expectation is they'll do 100 billion in free cash flow and then they do 90 and then they do 50 and then they do 60.
Let's take Nvidia out of it.
Mhm.
We know that we need more cloud. We
Mhm.
know we need more data centers.
Yeah.
We know that the neo clouds are supplemental to the big three.
Yeah.
We know we need everything in Microsoft's ecosystem. We know we need everything in Alphabet's, and we know we need everything in Meta. So if you just take those three, and then if you go on the premise of Apple's going to maintain being one of the top hardware companies there will be, and Zuck's social media platforms won't get disrupted, at least those five have a pretty good chance of just expanding over the next 3 to 5 years.
Mhm.
So if you take NVIDIA out of it, because I'll give it to you, there may come a time over the next couple of years where NVIDIA's business gets maybe not disrupted.
It just slows down. It just slows down.
But impacted
Yeah, it
is the
just
right
slows
word to use rather than disrupted. But you go into the Fab Five, it's pretty hard to say that they're not going to continue to do well.
Yeah.
So
Yeah, I think I'm bullish on AI. I think everything is there. That's all good. The only thing that I'm concerned with is the cyclicality of the semiconductor business always rears its ugly head, where companies, they just slow down their capex for a little while. Like
Yeah.
right now, Oracle is getting re-rated lower because the amount of money that they're expected to spend is really up there, and so at some point they won't be able to tap the debt markets. That's
well,
a
that's the big
major
problem with
buyer.
Oracle. Like
Yeah, that's a
Oracle
major
has tapped
buyer.
the debt markets.
Yeah, it's a major buyer of GPUs. If they fall out, you've got competitors coming in also, offering things. So it's like it's a headwind. So I think a lot of times people don't want to look at the headwinds. People just want to only look at the rosy pictures. And the thing is, once the cycle ends or slows down, companies get re-rated, and the re-ratings are typically very violent. And the challenge that you run into is that because companies like Nvidia are so high on the valuation list, that they make up a good portion of the S&P. And so when they come down, inevitably the S&P goes down. Everyone's like, look, it's a self-fulfilling prophecy saying AI was in a bubble all along. And it's like, no, AI wasn't in a bubble. It's just the valuation that people were willing to pay for this company was
May have been too much.
extraordinary. It's extraordinary based on that. So that's the only thing,
But
And
the companies that are going to benefit if that actually happens are the ones spending on CapEx, because now their free cash flow goes up and they just buy back more shares.
Yeah. See, the challenge that I have is look at this company. Look at these right here. Can you show this screen?
Yes, I can.
These are the neo clouds right now that are like the ones that are supposed to quote unquote like switch over from Bitcoin to AI and stuff, and all of them are just
Is
riding
Cypher
higher
on
every
there?
day. Yeah, Cypher is on here.
So JP Morgan put out something bullish about Cypher today.
Yeah, they're $6 billion right now. TeraWulf is about 5.2 billion. Riot Nebius is 23 billion. CoreWeave is 36 billion. Bitfarms, like whatever. But the point is, when you see this, is there real demand for AI? Absolutely. But I don't know what the business models of these guys is going to look like. Like from a profitability standpoint, like how much money are these guys actually going to make in order to justify this valuation? Are they just going to be like REITs where they're collecting rent? And like how much money are they going to collect in rent from the hyperscalers? And how much of that is going to play into their depreciation?
I am not sure.
Yeah. I mean, that's what I'm saying. Like if you take all of these things together, if you just combine them, that's $100 billion in market cap on a business that does not make any money right now. And like I said, this is one of those times where like the business models are not necessarily 100% clear. So the question is, why would you want to pay X amount of money for a business model you don't understand. And I think that's the thing. Like, invest from an investing standpoint, people are just valuing things based on future expected cash flow rather than exact, like reality right now, which is fine. You should definitely invest in the next big thing. But like I said, I don't see a lot of these companies having like a giant moat around their business. And long term, I wonder what the profit margins are going to look like.
Yeah, I'm not sure. I mean, that's why I stick with the big ones, because I'm not smart enough to know which neoclouds are going to work, which aren't.
Yeah. I think people are just looking at the deals right now these guys are making and then basing their investing decisions based on that, which is fine. I mean, I'm not here to tell people they can't chase momentum if they don't want to, but but then there's other companies out there that generate significant cash flows that are real businesses that people are just like, no, I don't want to touch that right now. And those companies are the ones that are probably catch a bid later on. Like today we saw this whole re-rating on Novo Nordisk, right? So Novo
I
Nordisk,
saw that today.
yeah. And the thing is, like, their Alzheimer's, so they tried using smeglutide for Alzheimer's, which is like not even a primary use case, but the news that it's not effective for Alzheimer's sent this thing going down as if somehow these guys were expecting Novo's smeglutide to be positive for Alzheimer's patients. Like, no, like it was like a secondary thing. Like, oh, let's see how this thing impacts Alzheimer's, and it didn't work out. And everyone just looked at it and they're like, they re-rated it down. And then all the headlines that were coming out were stupid too. Like some people were trying to, right here, where is it? Shares plunge after Alzheimer's drugs blow to weight loss giant. What people don't realize is that Novo Nordisk has other medications that are coming out in the next few years that are going to be pretty big for them. I think one of them is like this one, CagriSema. Like this is like their next gen drug that's supposed to be coming out like next year. They've got a pretty decent market share right now, but they're, from a valuation standpoint, these guys are at a very low valuation. So I don't know. Eventually, I think these guys do turn it around, but as of right now, the turnaround story hasn't materialized just yet.
Yeah,
everyone was bullish on Oscar today because the whole ACA subsidy is getting extended.
Yep. Yeah,
that was up.
Pumped.
Oscar pumped hard in one day. I mean, and this is the thing, like sometimes the news can come out and just re-rate things very quickly. Pharma's like that too, man. Pharma, you get one drug approval and everyone's just like, oh my God, you're the next big thing. And they bid you up. And then if they have a trial that doesn't work, everything goes the other direction. But which other companies are you looking at that have been getting absolutely like destroyed over the last 3 weeks that you think are now in like value territory that it might be worth buying?
It's simply Meta and Amazon and Microsoft. Like, I'm not taking chances anymore. And I do think we get a sector rotation. And I do think yield is going to come back. And I think energy infrastructure is very interesting. I've been wrong on timing with that, but there's no way you can say we don't need more natural gas, we don't need more electricity, and you can't go. You and I can go raise money and start a software company. We can't raise money and go build pipelines. Like, that's not the way it works. So
Carnival took a little bit of a dip today. Basically what happened was there was like a analyst with some Carnival executives, and they just said that the competition in the Caribbean was heating up. So that like kind of caused a major sell-off. And then like Royal Caribbean and Norwegian, they got sold off at the same time because they were like, oh, there's more competition in the Caribbean, so margins might get compressed next year. So the cruise lines got sold off. I'm like, great. Literally everything was going great during the day, and it was like, and And that's just how things are. I mean, a few comments here and there can lead to some major changes. So healthcare is the same thing. Like today, the Trump administration announced that they could do like an extension of ACA, and Oscar takes a 22% upward move. And it's like, from an investor standpoint, like how can you predict these things without
You
having
can't.
insider information?
You can't.
You know, exactly.
How many times have you gotten caught or I got caught on something like that? I mean, it's just you can't.
Plenty.
There's no way to predict it.
You can be right a lot of times long term, but dude, you better be ready to be wrong short term a lot. That's the way I found myself. I found myself in that position where I've been wrong a lot in the short term, but then like long term I've been correct. Like end phase was probably one of those times where end phase would keep going up, be like, guys, end phase business model is not going to work. And then when it went down, everyone's like, oh, Kris was right. But for the longest time, it was like, let's shit on this. Same thing with Google. I mean, how much crap did you and me take for Google over the last year?
It's okay.
You know.
But I always say I don't look at things for the short term because I have no clue what's going to happen in the short term. I have a long-term thesis, and if it takes a year or two to play out, I can wait out a downturn. That's the beauty of it.
Yeah.
You know, I'm not leveraged. I'm not freaking buying on margin. I can wait a downturn out. I can be down 30, 40% and wait for it to come back and just buy more. Because that's my investing strategy.
Yeah.
I think a lot of people freaking utilize margin the wrong way.
The stock draft. Let's see.
Yeah, I'm getting killed.
Amit is doing the best with 23%. He's got Hood and Palantir and AMD. These are just killing it for him, like Nebius especially. He picked Nebius because the chat picked Nebius. Everyone got bullish on it. Matt had a good move on Rocket Lab today, but Bros is killing him. EOG and Celsius. And Amazon and Berkshire are okay. Man, he was up almost like 30, 40% at one point. You're getting demolished. And so, well, I'm doing not so good also. I'm surprised that Axon has gone down so much. ELF, I should have been a little bit more careful picking that in this ETF. Like they had like declining growth rates. I don't know why I picked these guys that day. But yeah. And Novo is getting crushed because of the whole GLP-1 thing, but I think Novo has room to catch up next year. We'll see. Yeah, and Tanner took some hits with TTD. Even Service Now, he's done 18% on it. Huh. We should see if we want to do like a mid-year change up. You know, see if people want to change up their picks and then, you know, just declare like a half-year winner, and then the rest of the year we'll do the rest of the companies. Because I know that some people would probably want to get out of some of their positions right now, but they can't. Would you get out of your positions?
There's some stuff I'd change around probably.
Yeah. I'll take Meta off your hands if you want. I'll take Meta off your hands. I'll take let's see who else I would take off your hands. Maybe Microsoft. You can keep everything else. Let's see. Yeah. The one thing I realized also is like if you look at the names that Matt and Amit picked, a lot of them are very like high beta names. Like they're like moonshot plays that could either go in either direction. It's just it worked out for them and it did well. So yeah. All right, Steve. Huh?
You could say that again.
Yes. Tanner would iron fist NVIDIA. Yeah, he would. He would iron fist NVIDIA. He would also iron fist TSMC. He would not let that go. I think he would definitely. He just told us he would definitely get out of TTD and AppLovin while they're still up there. Well, not TTD, but AppLovin. He'd definitely get out of it. What about you? What are some of the things that you'd probably like move out of the way?
So probably hymns,
Mm-hmm.
but I wouldn't even get rid of MicroStrategy because that could make a rebound. And
Okay.
if I get rid of MicroStrategy, I got to freaking pick something that's going to double from here just to get back. So MicroStrategy, based on if Bitcoin goes up, MicroStrategy could do something. I would consider getting rid of freaking PayPal because I think it's dead money. Other than that, I would keep Netflix. I'd keep Salesforce.
Yeah. Yeah, I mean, right now, man, it's just Mag 7 and chill. I'm the only one. Well, I have Google. I think the UNH. I would actually load up a lot more of the health insurance names because I think they're going to meaningfully recover going forward with now like the big beautiful bill, not big beautiful bill. What is it called? The ACA extensions happening. That could help. So we'll see. We'll see. All right. That's it, Steve. I'm done.
10:30.
Yes, sir. Thank you, everyone, for joining.
Thank you, everyone.
Always a
Please
pleasure.
go follow Chris on X. And we'll be back at you next week. Everybody have a good
care.
Thanksgiving if we don't talk to you.
Take care. Have a good one.
Later, everyone.